Good morning, everybody. Welcome back to another episode of the Market Open. We are here once again, Tuesday, April 15th. It is tax day in the United States of America. So if you're not paid your taxes, I would imagine this would be a prudent time to pay them. It's how we finance the government, kind of, even though realistically we finance the government through selling a lot of our debt because we run a deficit. But regardless, it's April 15th, Tuesday, tax day in America. Good morning to everybody. We've got a bunch of things to talk about. Nothing too crazy that's going on, to be honest. It's relatively a flat pre-market in terms of what I'm looking at currently right now. The green momentum that we had yesterday, which was a continuation of Friday, we're seeing it in some spots. So Netflix, little green, that's off of Wall Street Journal headline. We'll talk about in a second. Palantir, little green. There was a new Fortune article on Palantir, which Karp gave some really good quotes to that we'll look at because it was a really good profile on him. But that's a little green after they got the massive NATO contract yesterday, which was very important. Webull down about 12% after going up 374% yesterday. So I expect that one to come back down to reality, but maybe it never will. We'll see what happens there. Robin is down a little bit. Nvidia's down a little bit. We do have a big Nvidia update that we'll talk about in a second. S&P's down about 0.3. Bitcoin's basically flat. I mean, nothing in terms of these stock prices are going super volatile to the upside or to the downside. And that's probably because we needed a little bit of a break from the volatility, either up or down, and being flat for a couple days, being flat for even a couple weeks, I don't think would be the worst thing in the world. And that's what we're seeing right now in the pre-markets. However, we do have a bunch of different headlines. We do have some data. We already got import prices right now. We'll talk about that. We have the Redwood Index coming out at 10 a.m. We got a bunch of different headlines that are going around. Trump obviously wakes up before all of us and starts tweeting. So we will be looking at his tweets and discussing the implications of those. And yeah, it's just another day in the market. Nothing really that crazy this morning that we had yesterday. Options expiry is on Thursday. That's correct. OPEX expiring on Thursday. Friday, we don't have a market to open because the market's not open. So we might have a little bit of volatility going into Thursday as we end out the week on a shorter week. But yeah, outside of that, I don't think there's anything that crazy happening this week. We do have some earnings to discuss as well. Actually, no, Thursday's going to be decent earnings. So that's going to be really important. TSM and Netflix are going to start off tech earnings. This morning, we had Bank of America, Citi, J&J, TLDR. They crushed it, all three of them. So we'll talk about their earnings, but all three of them absolutely crushed it. Again, continuing the trend of Goldman Sachs, Morgan Stanley, JP Morgan, which Jamie Dimon, by the way, pulled a move yesterday, and we'll talk about what he did. But all of them, BlackRock as well, showing incredible earnings, which is encouraging to see as we get into Q1. Is buying companies' IPOs the new play? I don't think so. I think Newsmax and Webull got a little bit of luck in terms of the cult that was formed around those names. I don't think buying every IPO makes the most sense. Now, granted, who knows? Like a Discord, a Klarna, maybe they really just get a lot of momentum, and maybe people are so eager to allocate capital to something different because they're excited to just be in a different name that could be the reason why they're pumping. But I think Webull is because the ticker symbol is bull. Like I genuinely believe that's like Webull is basically worth 70% of Robinhood's valuation. The ticker symbol is bull. I think it got people excited. Newsmax, I don't know. I think that was just a MAGA trade, and it got a lot of people just into it because of it being a network that primarily focuses on MAGA. It's up 8% in the pre-markets. It was up 13% yesterday, but it's down from 287. So don't know if buying IPOs is the play, but as of so far this year, it has worked out. All right. Good morning. Good morning. Thank you, everybody, for being here. Carter, June, Andy, Gene, Victor, Benny, Sean. What's up? What's up? Scarlett, Nolan. Good morning. Philip, Crowd Control, Thiago, For Real, Finers Diner, Binod, JV, the Austrian Camper, Guten Morgen from Austria. I love it. Guten Morgen means good morning. I have that level of culture inside of my brain. So I know that means good morning. Uzi, Freddie, Jude, what's up? What's up? What's up? Another day in the equity markets. Dexter, what's up, man? Singaporean brother. Can't wait to go to Singapore. A, to use Grab, but also B, to see Singapore. And C, this should be the actual reason, see my uncle because he lives there. So that will be very fun. Hopefully summer 2026. We're going to make that happen. All right, so let's get started. First thing I think we got to get into is the quote that was heard around the world yesterday. Very important quote. We heard it on the Market Open, and my reaction, I want to show you guys my reaction to the quote via a picture before I actually show you the quote itself. because it was a very important quote, and some of you guys might already know what I'm talking about, but this was my face as soon as I heard what Mr. Scott Bessent said. There you go. It's that classic emit woo type of face. It's like, hold on, did he just say that? Now, what did he say? He said something that maybe is why we're flat in the pre-markets. We're not super up, we're not super down. Maybe it's because what Bessent said is getting everyone to chill out. 13 seconds. Here's what he had to say yesterday that got everybody talking.
Maybe some of that uncertainty starting to evaporate.
Yeah, if we measure uncertainty by the VIX, I think that the VIX, I don't want to make market calls, but I think that the VIX spiked and is likely peaked.
Maybe some of that uncertainty starting.
I don't want to make market calls, but it seems like the VIX has spiked and likely peaked. Okay, that's bullish. Why is that bullish? Well, the reason that's bullish, and again, he might be wrong, right? You might not want to believe him here. You might want to take the opposite of what he's saying. But in my opinion, essentially, Bessent is saying, chill out. We're going to get some deals done. It's going to be okay. The deals that we get done are probably going to decrease the level of tariffs that we impose on other countries. And as a result of getting all these deals done, as a result of lowering the tariff rate kind of unilaterally, which in my opinion is kind of the game plan to get a lot more concessions, the market's going to relax. The VIX was down 20% yesterday. The VIX is hopefully going below 30 today. It's been above, it's up a little bit right now, but it's been above 50, give or take 2-3%, basically for the past couple of weeks. And so usually when you tend to buy stocks when volatility is that high, stocks are down enough where the 1, 3, 5-year forward return tends to be positive. So yesterday was down about 18%. If we can get this thing back down to like 25 or even in the low 20s, I think equities will benefit. But more importantly, I think the market will just have calmed down from the volatility that we experienced over the past 2 weeks. And realistically, once April 2nd hit, like that's when volatility spiked like crazy. The 10-year right here, slightly going up a little bit, nothing too crazy. It was down yesterday, which was nice. The 30-year as well, going up a little bit. And in one of the reasons I think Bessent said what he said is because the bond market doesn't thrive when volatility is high because they might decide to sell bonds, which would increase yields. And we can't afford to increase yields right now. So I think Bessent saying volatility is peaked is not only a market call, because it is, even though he said it's not, it is a market call. It's also kind of an argument of his read on Trump, which may or may not be accurate. But I think his read on Trump is, hey, Trump will probably still say a bunch of crazy things, but he's not going to say stuff that will quite literally get a VIX to go up 10, 15% in a day in the context of tariffs. Maybe in something else he does, but in the context of tariffs, it looks like, because that's what the whole interview was about on Bloomberg yesterday. It's like, hey, like, are we done? Do we have certainties? Are we going to get deals? Like, can we all chill out? And Bessent was really chill throughout the entire interview. He said, yeah, we're going to be okay. We're going to get deals. Trust the negotiating process. And the VIX has most likely peaked. It would need to be something dramatic to get the VIX to get back above 50 again. And obviously in this market, anything could happen to get the VIX to be pumping. Rocket Lab right here about up 2.8%. They got a great deal yesterday. We'll talk about it in a bit. But they are up 2.8% of the pre-markets. But I think we would need something, again, pretty intense to get the VIX to spike as high as we did. And now that the deals are starting to come into place, we got some Vietnam deals, we got Korea deals, we got Japan deals. We have some China updates that we'll talk about. It looks like Beijing is getting more friendly to want to actually get into a deal. Hopefully volatility has peaked, and that is ultimately not the worst thing for equities. Now, in the context of one specific equity, Nvidia, we did get an update this morning from Mr. Trump himself, which is not really contributing to the volatility that we're seeing on Nvidia because it's basically flat in the pre-markets. But apparently 500 billion is all you needed to get on Mr. Trump's good side. He says right here, Nvidia commits $500 billion to build AI supercomputers plus in the United States exclusively. This is a very big and exciting news. All necessary permits will be expedited and quickly delivered to Nvidia, as they will all companies committing to be part of the golden age of America. I mean, this to me is basically him saying, hey, you know, Nvidia is good. Nvidia is good. And yes, the stock did not pump on this. I think I was talking to Tanner yesterday. I was like, I don't know what they're looking for. I really don't know because like yesterday, you know, I don't think they'd have to pump on the announcement that was made yesterday about Nvidia investing in the United States, because the investment itself is not a reason to pump, but the investment as a way to get Trump to not be as intense with them, to me, is a narrative changing investment, because now Trump, as he literally just said, everything will be expedited, Nvidia will get all the approvals, yada yada. Maybe we don't tariff semiconductors at all as well. Like, that to me was enough to get the market to be like, okay, so Nvidia is exempt from most of the harshness of the tariffs. Apparently not. Nvidia right here, 110.32. I did buy a little bit more Nvidia yesterday, but Tanner's argument was that he thinks the market genuinely does not believe this company is going to be doing hundreds of billions of revenue over the next couple of years. And that's why he thinks the stock is trading at the multiple that it's trading at right now. And yeah, I think he's right. I think it's that, maybe some of the tariff stuff, but realistically, it's the market thinking all of a sudden Nvidia is not going to be able to put up the numbers, or it's just Max 7 is not had the best year, and Nvidia has been one of the culprits of it. But it's something. It's something that the market feels about this company, and they're going to have to keep beating and raising over the next few quarters to really get the market to believe, no, this does deserve to be potentially one of the world's first $10 trillion companies. Obviously, the growth will have to be there. But if they can deliver, and given all the catalysts we're seeing with AI, it seems like they will, then hopefully the tariff stuff is not going to be that big of an issue for Nvidia as well. So that's what we got in the context of Nvidia. Yeah, I mean, yeah, Nvidia is going to be spending $500 billion, but to me, that's also bullish, because if they have $500 billion to spend, it's not like they're going to lose all that money, right? Nvidia is a pretty smart company. I would imagine they think, hey, if we spend $500 billion, we're going to get a pretty good ROI from building out these AI supercomputers and these data centers, and actually playing a pivotal role in building and manufacturing what we need to be able to architect the next generation of our chips. Like, $500 billion to me is bullish. It's not that the $500 billion is leaving the company. It's that the $500 billion will be invested to get a return. So still, the market felt zero excitement on it, and I just think it's going to take more earnings in order for this to play out. Regardless, bought Nvidia yesterday, excited for it, and seems like we will continue to get some momentum if the earnings can continue to beat, which they have beat over the past 5 quarters. Rocket Lab. All right, what's the update on Rocket Lab? So Rocket Lab, this was the main thing that came out yesterday. It was after the bell. Rocket Lab has not had a headline for a long time, so this is what we had from Rocket Lab. They've been selected for 2 major government programs providing hypersonic test launch capabilities for the U.S. Air Force and the UK's Ministry of Defense. These multi-billion-dollar contracts enhance Rocket Lab's strategic positioning. When I saw this news yesterday, it was really exciting, because Rocket Lab is really turning into like a defense contractor, and they're becoming one of the better defense contractors that are out there in terms of gaining more momentum and excitement in the context of not only space travel, but space travel for defense-related issues. So the specifics of this is Rocket Lab has been selected by the U.S. Air Force to participate within its enterprise-wide agile acquisition contract, EWAC. If you're in the Palantir community, you know that we've been waiting for Palantir to also get an EWAC contract. It hasn't happened yet. We've gotten close to it. We've gotten some deals that are similar to it, but we haven't officially got that EWAC contract. So the fact that Rocket Lab got that before Palantir did was actually pretty impressive to me. And this is a $46 billion indefinite delivery, indefinite quantity contract designed for the rapid acquisition of innovative technologies, engineering services, and technical solutions that develops the Air Force's new capabilities. The program has a contracting period through 2031 and is designed to be broad in scope, flexible in funding, and agile for maximum use to enable the Air Force to quickly procure services and technologies across various domains. And then from the UK's Ministry of Defense, that Palantir does have a deep relationship with it, starting in December 2022, they got a contract. Rocket Lab has been selected for its hypersonic technology and capability development framework. It's a $1.3 billion framework to rapidly develop advanced hypersonic capabilities for the United Kingdom. Now, Rocket Lab's not getting all of this money, but they are part of a consortium of different companies that have a chance to bid for the money that is allocated. And so it's good. It's not bad. And if they can get the majority of this money that's being allocated right here, obviously that would be very beneficial as well in the context of Rocket Lab. Yeah, as Martin says right here, they just won the right to bid on them, but SpaceX didn't make the list. I don't know if SpaceX was even competing for this, if SpaceX wanted these contracts, but Rocket Lab and a ton of other space companies were competing for it, and now Rocket Lab has the chance to actually bid in an effective way. Yes, very cost effective as well. I think that's the big thing I've been learning about Rocket Lab is the reason they're getting some of these deals is because most of the people that are contracting them realize that Rocket Lab's able to get the job done in a really efficient way. And as a result, I mean, as long as that continues, which has been a priority from Sir Peter Beck in the interviews that I've heard of him, they should be able to get a lot more contracts. They are only 10 cents away from profitability. And I think it can happen before the end of the year, even though I know some of the break-evens are in 2026. But if they can get profitable as a company and have this growth, $8 billion market cap, again, we need the growth to continue, but profitability would definitely be a big turning point for them and allow them to gain more momentum. 1970 right here on Rock Lab. That's up about 2.98%. Netflix is up a little bit. Nvidia is down a little bit. Robin is down about 0.5%. Meta is up 0.05. S&P is down a little bit. S&P, I mean, we're seeing a lot of these red candles get erased. S&P was down almost 0.5%. Now it's only down 0.3. So maybe, or 0.13. So maybe we can get that 930 green open. Grabs up a little bit. GameStop's down a little bit. Materials, MP, they're up another 6% after being up 21% yesterday due to the China rare earth mineral stuff. Oracle's up a little bit. TLT's down a little bit. Amazon's down a little bit. And then you have Goldman Sachs that is currently up. Let's get into earnings. Bank of America up about 2.3%. Not a bad earnings at all. A couple other companies that we're going to take a look at, but let me pull up Bank of America. Again, the trend on Q1 earnings has been really damn positive. Like really positive. And maybe it's just Q1, but these companies have absolutely crushed. Amit, what are your thoughts on TSMC? I would just rather buy Nvidia, but I think if you're bullish Nvidia, you can be bullish TSMC as well. So, I mean, any of the semis, your thesis has to start and end with Nvidia, in my opinion. But if there's different valuations or metrics you want to look at for a TSMC, then yeah, I obviously don't hate it if I'm bullish on the overall landscape for Nvidia. Bank of America up by 11% on EPS, 90 cents versus 81 cents. Then revenues, 27.3 versus 26.1 billion. They beat by 2%. EPS is up 18% year over year. Revenues up 6%. EPS is up 10% quarter over quarter. Revenues up 8% quarter over quarter. For a bank, these are incredible numbers in line with the banks that we've seen before. Then you had Citi. Beat EPS by 6%, 196 versus 185. Beat revenue by 1%, 21.5 versus 21.2. Revenue's up 2% year over year, but EPS is up 24% year over year. So they're continuing to gain more momentum. PNC was also reporting today. They beat EPS by 4%, missed revenue by 1%. Nothing too crazy. EPS is up 13% year over year along with revenue. Quarter over quarter, both of those metrics are declining. And then we had J&J. First of the pharmaceutical companies to report for Q1, beat by 7% on EPS, 277 versus 258, and then revenues beat by 1%, 21.8 versus 21.57 billion. The banks did great. The banks did really great, and we need the banks to keep doing great in order to get more momentum for the rest of the broader economy. Bank of America right here up about 2.34%. J&J in the pre-markets is down about 1%. They were up about 2% yesterday. And then you got Citigroup that is up 1.5%. Citigroup deeply was undervalued. I think it was closer to like 30, $35 last year. So it's had a nice run since last year. Right now it's 64. But the banks crushed it. The banks crushed it. And if the banks are any indication of what's going to happen in tech companies, which TSMC and Netflix are going to be the main ones this week, then hopefully we're going to be in the right situation when it comes to earnings. Let's talk a little bit about Netflix. So a Wall Street Journal article came out yesterday with a leaked memo from the CEO of Netflix. And the argument that he made was that Netflix will become $1 trillion company by 2030, which is quite the ambition, and that they will double their revenues. They're doing about $40 billion in revenue, so they want to get to about $80 billion in revenue by 2030. And they also feel they can triple their operating income to $10 billion, and they can get around $9 billion in ad revenue. So do I think it's possible? Yeah, I mean, I think it's possible. It's hard to bet against Netflix, given though they're the only profitable streamer. They're getting into live sports, wrestling, NFL games, all that stuff. But in the next 5 years, for them to double revenues, it would be aggressive. And then they would have to get a multiple on that would also be congruent with a doubling of revenues. And the reason I say it's aggressive is because they're already so saturated. Like there's so many people that use Netflix already. So at some point, growth companies stop growing, because this is what we're seeing with Apple, in my opinion. Like, everyone uses Apple, so it's hard to get new markets. But Netflix is pretty confident that they can. And so I do think in 2030, you're not going to be super upset at owning Netflix right here. I just have always struggled with the valuation and the multiple, especially when you look at Mag 7 stocks that I think have a lot more leverage, and their balance sheets are way better than Netflix. They don't have to pay hundreds of billions of dollars for content. They can, leverage all that via technology. But nonetheless, the ambition on Netflix seems pretty high by the management team. Bitcoin right here, 85.8. Bitcoin getting some momentum. There you go. Getting a little bit of a run. That's probably good for Hood, MicroStrategy, all those things. MicroStrategy did buy about 3,500 Bitcoin yesterday. Bank of America. So with a couple of updates we got from Bank of America as well this morning, they are still, and the CEO said this himself, not expecting a rate cut this year, which is pretty incredible to me. I'm just like, I think we're going to get a rate cut, but they are expecting a strong likelihood of a recession. And they're also expecting that we're not going to get any rate cut. And as you can see right here, they also said Bank of America made record revenue from stock traders. JP Morgan said the exact same thing, that they had a record number of commissions when it comes to stock trading. So I think that's obviously bullish for Robinhood. We're going to see IBKR's earnings today after the close. That's going to be very important to see what that looks like for Robinhood as well, especially if margin went up or down in Q1, which I imagine it went up, but it might go down a little bit in Q2. So yeah, I mean, all the banks continuing to hit on every single cylinder and showing that they can keep getting momentum. Farzad, what's up? Thank you for being here, brother. Farzad was on the market close on Friday. He was on for about 5 minutes and he talked Tesla. I asked Steve, what is his favorite Mac 7 in the next 5 years? And he said Nvidia. I would have picked Tesla, but he picked Nvidia. And then Farzad got on. He explained why the answer should be Tesla, which I agree. Look, if they nail robots, I think the answer is obviously Tesla. I think Nvidia is going to do great, but if they nail robots, the answer is Tesla. We just got to see if they can nail robots. So, yeah, in the next 5 years, hopefully Netflix is $1 trillion, and hopefully Tesla is also not doing too bad. Okay, a lot of you guys are talking about the death cross on the S&P, so that did happen yesterday. Here is a kind of recap of what the death cross is. I also want to get a picture of what that death cross looks like. So this is a technical term, and we'll ask Jason about it today because he'll be on as well for Technical Tuesday. But okay, so this is what it looks like right here, and the technical explanation of it is that the 50-day moving average fell below the 200-day moving average, and this is the first time since March of 2022. Historically, not all death crosses signal major downturns. Only 3 of the 11 since 2000 preceded significant bear markets, such as the dot-com crash, 2008, and 2020-22. In 63% of cases, the market was either at or near a bottom when the signal happened, which is actually what Tom Lee said yesterday and why he said it's kind of bullish. The April 2025 event marks the 9th death cross in 20 years, with some leading to further declines, like we talked about, 2008, 2022, and others occurring close to market lows like 2010, 2011, 2015, and 2020. So we have had examples of the death cross happening where the 50-day goes below the 200-day, and that leads to a significant decline. But we also have a couple examples of saying, hey, it actually is marking a market bottom, which is, relatively bullish. And Tom Lee kind of made a point on a piece of research yesterday that I think was important. So this piece of research has been going a little viral right here. There have been 16 times when the S&P 500 dropped 15 or more percent at some point during the year. Only 3 of those years ended with the index finishing in the green. So history suggests if you fall 15% during the year, it is unlikely to finish green for the year, given the decline that you're having. Tom says to this argument, this is misleading since many of these reached peak drawdown late in the year. So Tom's argument is, hey, if we had the maximum drawdown, which is what the death cross potentially is signaling, in the beginning of the year, in April, then we have a chance to recover, right? Whereas a lot of those situations that you're seeing right here on the chart, this happened towards the end of the year. And if it happens in October or November, you just don't have enough time to recover because you only have a couple months left of the year. So, yeah, I mean, I'm not reading too much into the death cross. It is what it is. I mean, people were saying Nvidia has a death cross, and that's like, Nvidia is going to put up $45 billion in revenue and grow 60%. So it's like, at the end of the day, the market was going to have to come to the conclusion of, do they like Nvidia as a growth story or not? And I think everyone's going to have to come to the conclusion in this market of, do we think the tariff volatility will subside? Do we think earnings will be strong? And do we think CPI is going to come down? And if all those things go the right way, then I think we are set up to hopefully have a broader bull market. But that's what we got in the context of that death cross. So you're telling me the market can go either way? Yes, exactly. That's your alpha. The market can go up or down. No, in all seriousness, that's the data's mixed, right? In some situations like 2011, 2020, it was a bottom. In other situations, 2008, 2022, it was a top. So, I mean, realistically, we're just gonna have to find out. My thesis again on this market is very simple. Earnings is good. Inflation comes down. Trump volatility for the tariffs goes away. And that's pretty much all you need. I'm looking. Oh, and then rate cuts. We get those 4 things, I think we're going to be decent. I really do. We also need inflation, or we also need job growth to be strong, and we need less inflation. But as long as those things go the right way, then I think we're going to be in a strong position. Okay, macro data. So we did get some macro data today. Let me pull this up right here. Now, some of this macro data matters, some of it doesn't matter. So first, let's talk about Canada, which I'm going to on April 26th. Let me pull up the Google form and link that again. We had inflation expectations for Canada that came in way better than expected. So the inflation rate in Canada fell to 2.3% in March of 2025 from an 8-month high of 2.6% in the previous month. This is bullish. Market expectations were 2.6%. It ended up coming down to 2.3. The United States is at 2.4. If we continue to have inflation expectations around the world start to come down, I mean, this is really good. Like it's showing that every central bank, and Canada's already cut rates a couple times. The Central Bank of Europe also cut rates, I believe, last month. If we continue to see these inflation expectations or these inflation readings starts coming way lower than expected, then I think we're going to have a lot more momentum in terms of all central banks deciding it's time to cut, but also deciding that we can enter into a world that doesn't need to have such restrictive monetary policy, which J-Pow has set the tone of since 2022. Now, in terms of the United States, we did have import prices. That was a big beat. The market was expecting them to come in at 0.1%. We came in at negative 0.1%, which is amazing, right? The U.S. import prices slipped by 0.1% in March of 2024 for the previous month, following a downwardly revised 0.2% increase in February and defying market expectations for no change. It was the first monthly decline since September 2024. Now, the problem with this is that this is all pre-tariffs. That's the issue. So although import prices are down, we don't have tariffs that are meaningfully in effect. So the import prices for April of 2025 are going to be very important, because now that we have all these tariffs in place, how much will import prices go up? Again, if import prices go up, then obviously consumer prices can go up, because if it's costing more to input, that cost will be passed on to the consumer. But the fact that that went negative is really nice to see, because it's like, okay, wait a second, that means the cost of average goods and services should go down. The problem is it's before tariffs. Now, the good thing here, this is the Goldilocks zone. If by the end of April, we get deal after deal after deal after deal. By the way, there were some updates this morning on India getting more likely to participate in bilateral trade agreements with the United States. So we are seeing some updates here and there about more deals. If we can get all those deals and we don't have to institute the tariffs that Trump has been preaching about by the end of April or by the end of May, I think import prices can continue to go negative, which is good, right? Which is not horrible. So it's like the tariffs right here are the overhang behind everything, because if those import prices came in the way they came in and we didn't have this whole tariff overhang, I think the S&P would be up like 2% right here. That's a big deal. For import prices to go negative, that is a leading indicator that CPI for April or May is going to be well below 2.4, or at least stagnant at 2.4 and not going higher, especially because PPI came in negative for the first time since 2022. But like, we need the tariff volatility to subside in order for that to play out. And right now, we don't know exactly if that's going to be the case. In terms of that India deal I was talking about, I saw the headline from Bloomberg this morning. It looks like India is working with the U.S. on some bilateral stuff. I'll try to get the exact article, but that's the headline I saw this morning. It's not a confirmed deal, but it's that, like, basically the point of the article was negotiations are going very well. And I think the more headlines we get from that, from Vietnam, Thailand, India, etc., the better chance we have of tariffs eventually going away. Cool. So that's what we got in the context of some of that macro data. We get the Red Book index in about 45 minutes, which is a small business index, if I'm not wrong. Red Book index year over year. That is it's a small business index in the context of inflation. So at 10 p.m. or 10 a.m., so in about 45 minutes, we'll get those results. Sorry, it's not inflation. It's a sales weighted year over year same store sales growth in a sample of U.S. large general merchandise retailers. So it's kind of like retail sales data. It's not an inflation read. I expect it to go down, because that means that we're getting some demand destruction, which is actually not the best thing, which is actually a decent thing for inflation. But the market right here on Redbook is expecting. Oh, did we get it already? Hold on. Did we get it? Oh, yeah, we got it. Why did I think it was coming out later? We got it. Okay, it came in at 6.6% versus 7.2. 6.6 versus 7.2. We got it. Cool. Okay, so that's what I expected. I expected it to come in lower than expected. So 6.6% over 7.2. That means retail sales declined in general merchandise stores across the United States. And the market wanted 7.2. We came in at 6.6. Again, this is okay for inflation. That means people aren't spending that much money. It's not that much of a dramatic decline, which would lead you to think there's a recession, but it is somewhat of a decline, which is relatively a good thing. Let's get an update from Pomp and Bitcoin. We haven't heard from him for a bit. Let's see what he's thinking about the current state of Bitcoin and where the market may be going when it comes to gold, Bitcoin, and fiat currencies in general.
Bitcoin now sitting about what, $85,000, $86,000 after touching what was the most recent low? We want to say about $76,000.
Correct.
Where are we going here? And how are you thinking about Bitcoin relative to gold in this particular moment?
Yeah, I think that's what everyone's really talking about right now. Bitcoin is down about 10% to start the year. Gold's up 20%. But if you look out over 1 year, they're both up about 35%. So it's pretty interesting that there's been this divergence. But if you go back and you take a look, you can actually see that gold usually leads these rallies. And nobody really knows why that happens. My kind of guess would be that a lot of the central banks and institutional investors, they're either not approved to buy Bitcoin or they're not used to running to Bitcoin in these moments of kind of geopolitical uncertainty. What we do see, though, is when gold runs about 100 days later or so, Bitcoin not only catches up, it usually runs much harder. And so you get that kind of higher volatility.
How much are you seeing people either buying or selling Bitcoin direct, meaning actual Bitcoin, versus playing the ETF market, and the ETF market effectively buying the Bitcoin or selling the Bitcoin on their behalf?
Yeah, I think you get both now, right? It used to be obviously all retail and all direct in spot market, but I do see a lot of people using these ETFs. And I think what a lot of people kind of missed over maybe the last couple of months is there was a sovereign wealth fund that came out and said, hey, we actually got Bitcoin exposure through the ETF. And the reason why I thought that was interesting is there's a lot of conversation about Bitcoin and the geopolitical kind of debate, if you will. And one of the things is if you are buying Bitcoin and you're actually taking control of that Bitcoin in a self-custody way, you may be doing it for things other than price. You may be worried about the U.S. Treasury market or maybe sanctions or something like that. But if you're buying Bitcoin via the ETFs, you're simply just getting price exposure. You're not actually doing it from a geopolitical strategy standpoint. And so I think there's a lot of countries around the world that are saying to themselves, well, if the United States has a strategic Bitcoin reserve, they're openly talking about the fact that they're going to go buy more, we should have a Bitcoin strategy. Doesn't mean that we have to buy. We could just sit it out. But we need to have a decision here. And buying the ETF allows me to get price exposure, but not actually take on the geopolitical risk of having to talk to you.
Do you think they're going to actually be buying? I mean, that is a big question right now. I mean, yes, we have indicated that we're going to create this reserve, at least initially with, confiscated Bitcoin and the like. But do you think that there's definitely a sort of all green lights ahead for the taxpayer effectively to be buying Bitcoin? Because that's what we're talking about.
So they're talking about tariff money going.
Yeah. So I went down to Washington, D.C. last week to the White House. I interviewed Bo Hines, who's the executive director of the president's advisor council for digital assets. And I explicitly asked him this question. The thing that he said to me that I think kind of took away was not only are they going to have the Bitcoin strategic reserve, which we have, they are going to buy as much Bitcoin as they possibly can. And
with what money? And does that have to be authorized by Congress?
So there's a bunch of different ways they could do it. I think what they're trying to figure out is what is the best way to do it. And so a couple of examples would be they could revalue the gold. They could sell some of that. They can then go and they could buy Bitcoin.
Does that have to be done with Congress's approval?
There's a debate around who would be responsible, who would be involved. And they have
all this has to be done with executive order. I mean,
well, they have an interagency group right now that's working together. And so at that table is everyone from energy policymakers to law enforcement to economic advisors. Kind of everyone is trying to figure this out. I don't think you're going to see kind of very rash decision making kind of unilaterally, but I do think that working group is trying to figure it out. But you also have things like the tariff revenue or other areas where we may be saving money that we previously were wasting or abusing. And so I think that is probably, to me, the thing that the market most misunderstands is it's not just, hey, we're going to hold the Bitcoin. They're going to actively try to buy Bitcoin. And there's other countries around the world, they may be acquiring Bitcoin by mining and using natural resources that they have there. And so I think there's a lot of strategies here that the U.S. is going to pursue.
I mean, look, if that happens, if Pomp is right that we're going to get way more Bitcoin on the balance sheet, and it's not just going to be holding it, but it's going to be buying it, I mean, you got to imagine that's bullish for Bitcoin. Like, you've got to imagine if the United States is serious about if what Pomp is saying is correct, that his conversations have led him to believe that it is very evident that the United States will be actually buying Bitcoin. I mean, yeah, it still feels like this is something you want to have some exposure to, whether it's through Robinhood, which is my favorite way, whether it's through iBit. Coinbase, I think, is not the best way, but you can get Coinbase, MicroStrategy. I mean, there's a lot of different ways to get exposure to the asset class. The question is just if it has some explosive move, which Bitcoin's been relatively flat for the past couple months. I mean, it's just been chilling in this range. But if it does have an explosive move when the United States announces they're buying it, that would obviously be very bullish. It's funny because like the narrative going into January was that this is going to be the major theme of 2025. It's like the Bitcoin reserve, the US buying it. And then when Trump was getting inaugurated, we saw all-time highs, 109,000 on Bitcoin. And then slowly by slowly, that narrative just kind of faded out. And maybe it gets revived. But I think Trump is also dealing with a lot of other stuff right now, aka tariffs. So don't know how prevalent this is on the agenda. But they got 4 years. If they get it done, would not be the worst thing in the world. What's your beef with Coinbase other than your Robinhood bias? Okay, I don't have beef with Coinbase. I love Coinbase as a company. Brian Armstrong is amazing. I just think they're a one-trick pony. Like, and I don't even think this is biased. I think just objectively, Coinbase gets subscription revenue and they get trading volumes. Robinhood has like 17 different things that they do in order to build up their business. Now, Robinhood isn't as diversified either because if the market tanks, Bitcoin tanks, Robinhood tanks as well. But Robinhood is showing the potential to be diversified with net interest revenue, the sport contracts. I mean, there's so many different things that they're doing, the private banking stuff. Coinbase is a crypto exchange. That's it. It's one of the best crypto exchanges, one of the biggest ones, but I mean, it's just not that exciting. It's if Bitcoin goes up, Coinbase gets more volumes. If it doesn't, then it doesn't get volumes. And also, I mean, to actually compare the two, Coinbase did $94 billion or $94 billion of trading volumes last quarter for crypto. Robinhood did 70. Coinbase has 10x the amount of coins and is global. Robinhood is only in Europe and the United States. And it only has like Bitcoin, Ethereum, Solana. Like it has some of the meme coins, but Coinbase has everything. So for Robinhood to have 65% of Coinbase's volumes and barely have the amount of assets or barely be in the amount of locations, that to me just shows that people are choosing Hood over Coinbase. And that's why I think it's more exciting as an asset. Or as a stock, you know, but I think Coinbase will do fine if Bitcoin does well. I think Robinhood can do fine regardless of Bitcoin, just because the overall wealth transfer, the broader market, all that stuff is a catalyst for them. Sally, thank you for the $20 super chat. Appreciate that. Sally A, thank you for being here. And thank you for the $19.99 super chat. Appreciate you being here. Thank you again for the super chat. Hood is barely in Europe. Yeah, that's the other thing. Hood is barely in Europe. They've got a lot of room to grow, dude. Also, Vlad did confirm via a tweet the other day that they are expanding to Singapore this year. So he confirmed it will be happening in 2025, which I think would be very bullish if they start to compete in the fintech world that is Singapore. Now, Singapore has a lot of different fintechs. Like Singapore is, I would say, the fintech capital of Southeast Asia. So it's going to be competitive. But if they can provide an amazing user experience and they can get into Singapore, then I think that's another big vertical for them as well. Here's Dan Ives this morning talking about tariffs in relationship to all the Mag 7 companies and what these tariffs mean. He's gotten more bullish, but he is still not as bullish as he was before the tariff stuff, given all the volatility that it's caused for some of these big tech companies.
Okay, and Trump basically ended that trade, right? And I think the reality is, someone like myself, 25 years covering tech and talk to investors around the world and travel around the world, that no doubt that's the trade in terms of like you're seeing money flow into China tech, into Europe, into gold. It's that sort of sell America strategy that's definitely starting to play out. But again, that's self-inflicted, and that's part of the whole what we've talked about over the last week and a half is that if these tariffs in their current form actually went into effect, it would take U.S. tech sector back a decade, and that's the reality.
And yet, Dan, I think it means that we're actually going to start being more forensic about the valuation differentials of the key tech players in the United States. Dan, you are one of the people who's looked most forensically at, for instance, Tesla many times over the years, talking to CNBC about it as well. Is Tesla in a really, really dangerous position now? And no one on this channel, by the way, thinks some of the action against Tesla showrooms is acceptable. It is totally unacceptable. But actually the feeling around this stock now, is it going to make it really, really challenging to reclaw its previous ground?
look, Musk has a choice. You either leave the administration and ultimately start to repair some of the brand damage, or otherwise, if he stays and doubles down Trump administration Doge, I mean, those are brand issues that will be, I think, some permanent demand destruction. And we're bullish. We're one of the most bullish on Tesla the last decade. But the reality is you have so much great things ahead in terms of autonomous robotics, unsupervised FSD in Austin. But brand damage is real. And for Tesla, when you have valuation, yeah, it has been a change because it's really that double whammy in terms of what we've seen with Musk. And that is, even though he's opposed, to obviously tariffs, the brand issues have become, I think, front and center. And that's something that needs to be rectified. And there's only one person that could do that. It's Elon.
So I agree with Dan Ives, but I also don't agree with him in respect to if they nail FSD and robotics, I feel like the brand damage might not be as permanent as he thinks it is. Obviously, the brand damage is intense. Not saying it's not intense, and it's turned off a lot of people to this company. But I think the story here is FSD and robotics. And the question is just if an Uber costs $40 and a robotaxi costs $30, do people hate Elon so much that they choose to pay an extra $10? I don't know. We'll find out, especially when it launches in Austin in June, which is not going to be the biggest launch in the world because there's still going to be driver assisted and all this stuff. So it's going to take some time, probably minimum till mid 2026 to really see that expansion. By the way, Waymo's coming to Atlanta. They announced that this morning. So Waymo continues to expand. I still think Google heavily is discounted from the Waymo valuation. That should be a factor in that overall market cap. But I do think there's a larger story here for Tesla. I want to ask a question right here in the chat. Do you think Tesla sees low 200s after Q1? They have their earnings next Wednesday. So if we do, I wouldn't be that scared to really take a bigger nibble at Tesla and start buying some more. But I wonder in this macro, like a week ago, yeah, I would have been like, yeah, it's inevitable. It's going to be below 200. Now it's like, all right, if the tariff volatility is dying down, even if they have the crappy earnings, what if it's just like the delivery numbers, which were horrible? I mean, they were horrendous. 336,000 was the worst in 3 years. But the stock was down 5%, right? So it's like, I wonder how bad do the earnings have to be in order for this thing to actually fall into that low 200 or below 200 range. We got a China update right here. More escalations in the trade war. China is stopping its airlines to halt deliveries from Boeing.
Phil LeBeau is good enough. Phil, try not to mess it up this time, if possible. Our viewers are counting. No, we had some gremlins.
No. Hey, Joe. Yeah, Joe, this is what happens when you don't pay your internet bill. Let's give you the headlines of the news coming out of China. There's a report that China has told its airlines to halt deliveries of new Boeing aircraft as well as parts. Now, this is one report. It has not been confirmed by the state government, at least not in a statement yet. Just for some context, China has taken delivery of 18 Boeing aircraft this year, 18 new aircraft, but the order backlog is immense out of China. And when you look at it, they've got 128 named orders, hundreds more that are in the queue, but have not been named to specific Chinese airlines. There's also a report with regard to tariffs that is going to catch a lot of attention. Ryanair CEO Michael O'Leary, a friend of the Squawk Box crew, he told the FT today that there is every likelihood they may delay Boeing aircraft deliveries due to tariffs. And this,
there you go. So they might not be procuring from Boeing. We got 30 seconds until the market opens. Here's another headline real quick. Canada to provide temporary 6-month relief from counter tariffs for goods imported from the U.S. that are used in manufacturing, processing, and food and beverage packaging. There you go, baby. That's not too bad. Canada saying, hey, for the next 6 months, we are going to relieve the counter tariffs that we were imposing on the United States, particularly for manufacturing, processing, and food and beverage. That's bullish. It looks like a lot of this volatility from this trade war, hopefully, is going to start to subside. Tuesday, April 15th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Let's get into it. Robinhood down about 0.5% on the day as we open up the markets, 44.10. It's actually up a little bit right now, but it is slightly still red. Bitcoin, 85.8. That is green. Coinbase up about 0.3%. Netflix is up 2.3. Wow. That Wall Street Journal article about the CEO saying they want to be a $1 trillion company is enough to pump it 2.3% right here. People are really buying it on the expectation that they're going to follow through on that promise. 952 right here on Netflix, up about 2.4%. Bank of America, great earnings, beat on EPS, beat on revenue. They deserve to be up 4%. They are up 4.5% currently right now. Rock Lab, major deal they got yesterday, that surpasses $20 kind of. It's teetering between $19.98 and $20. That's up about 4.39%. Palantir, again, up about 1%. It was up 4% yesterday, got to a high of 97 after that major NATO contract. Literally on the market close, Steve called me yesterday just to talk about the NATO contract. That's how excited he was for Palantir. So NATO contract, something the Palantir community has been waiting on for a long time. We officially got it. I think it's going to open up the doors to a lot of European growth, and very exciting to see that for Palantir. They did an article on CARP. We're going to look at that in a second in Fortune magazine, and he gave some really good quotes. So we'll talk about that in a little bit as well. Newsmax is up 18%. Wow. Weeble's down 22%. It looks like people are going long Newsmax, short Weeble, which is hilarious. But Newsmax is pumping, Weeble is tanking. Nvidia right here is up about 1%. Applied Digital, the reason this is down is because they missed on EPS by 60%. So if anyone's wondering why they missed on EPS badly, it's a $1 billion company, small cap. I mean, if they miss on their metrics, they're probably going to get hit. But that one right here is down about 15%. Meta, flat on the day. They're going to be entering day two of their antitrust trial. Tesla right here down about 1.8%. The S&P 500 basically flat on the day. Apple flat on the day. Q's up about 0.25%. Reddit's down a little bit. Google's up about 0.25%. Grab is up 1%. MicroStrategy up 0.5%. Baba down about 0.28. TLT's down about 0.26. Amazon down 0.27. Amazon about to go below 180. Again, the exemptions that Trump talked about yesterday are good for Apple in regards to the iPhone, laptops, etc. from China. Not good for Amazon. They make a lot of everything else in China, so that stuff will still be tariffed at an aggressive rate. Robinhood just goes green, 44.44 on Hoodie, 44.30 now. Rocket Lab 20.41. Look at that. Rocket Lab actually getting some momentum above 20. Maybe you can hold above that to end the day, which would be really nice. 6.8% up on the day. Johnson & Johnson also had a great earnings. They're up 0.37%. Bank of America now up 5%. Looks like the market really liked Bank of America's earnings. Not bad at all. All the banks really benefiting over the past couple of weeks. Goldman Sachs doing a $40 billion buyback yesterday as well, so that was nice to see. And JP Morgan increasing their dividend. Goldman Sachs right here up about 1.24%. The Bank of America CEO was pretty cautious on the earnings call. He's like, and all the CEOs were, they're relatively scared going into Q2 just because of the uncertainties. They're not really predicting some crazy recession, but they're saying the chances are getting higher. And so it's up to Trump now to walk back all this tariff talk to decrease the volatility and hopefully the probability of those chances. Nvidia right here, 112.69. That's up about 1.7%. Getting some green. Weeble down 25%. The market giveth, the market taketh. And so Weeble's getting hit right now. Again, it was almost Robinhood's market cap, which was a bit ridiculous, but Weeble's falling down. Palantir 94.17, actually holding on a bit, up 1.5. S&P it's green, but it's flat, not really moving. Tesla getting from 248 to 250, so we got a bit of a green candle right there. Apple 202, Apple goes red. The Qs are up 0.33%. Where are the semis? Semis, well, they're all green. Wow. SMCI 2%, AMD 2%, Broadcom almost 1%, Qualcomm 0.33%, TSM 1%, Marvell 2%, Dell 1%, Micron 2%, ARM about 0.5%. Semis are going green, and then the crypto names I think are also going, some of the miners are green. So CleanSpark's green. CleanSpark also announced that they had $200 million line of credit backed by Bitcoin. So I guess they're going to be using their Bitcoin as collateral to get some credit, but that one is slightly green. MicroStrategy is a little green. And then the Mag 7 are pretty much all green. Actually, no, they're all red. Nvidia's green, Apple's green, Microsoft's green, everything else is red. Meta, Google, Amazon, and Tessie. Where's the 10-year? The 10 years at 4.38. At least it's not at 4.5, so that's down a little bit. The 30 years at 4.83. The thing that's been confusing me for the past 24 hours, and I don't really have an answer for it, is Japan. So this one is slightly down today, but Japan's 30-year spiked up an entire 100 basis points yesterday, which makes no sense. There's that spike from yesterday. So someone has been selling Japanese bonds. Japan's head of central bank yesterday said that we're most likely not going to be raising rates, which there's no way you can. I mean, you can't raise rates when the 30-year gets to the highest level since 2004. It is down a little bit today, which is nice to see, but I don't think the US is dumping their bonds. So who is it? Who's dumping Japanese bonds? And is it part of a potential unwinding of some type of trade that could be going on? But it's not every day you see the 30-year treasury bond in Japan get to 2004 levels. So that part I still have not. I don't think it's Buffett. That would be really weird, especially because Buffett's investing heavily in Japan right now. I mean, maybe it's Buffett, but I don't. If anything, I think Buffett has 300 billion of U.S. treasuries. I mean, I wonder if he's dumping Japan treasuries to get deeper into U.S. treasuries, maybe. But I don't know. I think it's my conspiracy theory is there's another country that is mixed into the negotiations with the tariff policy, and they may be using that as leverage. Hell, it may even be China. Who knows, right? So we know China and Japan were talking last week. Maybe Japan pissed them off, and China was like, "All right, we're going to sell your bonds." I don't know. But that part, I don't think I've not seen anyone with a solid thesis on why that 30-year is spiking the way it is. China says it will only engage in trade talks with the U.S. if its leaders show respect for Beijing. Yeah, so that headline came in the morning. This to me is like a non-headline because it's like, okay. like at some point, both of these countries are going to start conversations and they're going to be serious negotiations, just like it happened in late 2018. So, I mean, it's just posturing back and forth now. So eventually, hopefully we get a deal done, but it might take a little bit of time. My $112 Nvidia covered call is getting tested. Where's Nvidia? Right here, 111.96. Yeah, I have 119s for this week. So, I mean, let's see if we can hold out on those or if we have to roll. Wow, Robin is actually making a move right here. Almost getting to 45, 44.87. Interesting that Hood's pumping. I guess that's because of Bitcoin, because the broader market's kind of flat. Applied Digital, nasty 20% down right here. Meta, flat. S&P starting to go a bit green at 540. Everything else is green, but slightly green here on the day. Palantir 95. Okay, so let me pull up that Fortune article because this was some really good stuff. Palantir very close to 95. Here's one of the quotes from the article that I thought was incredible. And again, I've been saying I think they're going to crush Q1, and this quote right here to me makes it feel like they're going to crush Q1. So here's what they said. Karp said right here, when all the idiots hate you and you ignore them and you build the single set of software products you would need to actually transform your company or your government, you get breakout growth. That's what's happening. It was dope, dude. I love when Karp gets on the offensive, and I love when he just talks his shit. And he's like, dude, everyone who doubted us was an idiot. It's just that simple. Now, look, you can say that's egotistic. You can say that's arrogant, yada, yada. But if you're the CEO of a multi-hundred-billion-dollar company, you've got to be a little arrogant, especially if you're taking on the entire world that disagrees with you. And for the past 20 years has felt like you would never succeed. And I mean, like when you talk about chip on your shoulder, Karp is the definition of having a chip on his shoulder, and he embraces it. I think those are the stories we want to see movies made out of, right? Those are the stories we want to read about in books. Like the person who has a chip on their shoulder, but embraces the chip and wants to prove everyone wrong, right? That's like, it is one of those stories that universally can be adored. There you go. Palantir right there, back above 95, up 2.6% of the day. And so the fact that Karp is saying, hey, we ignored everybody. We focused on building the shit that mattered. And we knew it would pay off eventually, which is what's happening right now. That's why we're growing. I think that's him saying Q1 is going to show more growth than people are thinking. That is my takeaway from that quote. So it's exciting. It's very exciting. If anyone wants to read the article, I don't think it's paywalled, so you can read the article right here. I'm putting it in the chat. I'm going to be going to the article a little bit more later today, but it's like an entire profile on Palantir and their journey. It's a long article, so it's some good stuff. And that was one of the quotes we got from Palantir. 95.18 right here on Palantir. Rocket Lab 86,000, or not Rocket if Rocket Lab was 86,000 a share, that would be nice. Bitcoin 86,000. Rocket Lab, are we moving? Wow, 9.9%, 21. Oh my, that is surpassing that $20. I guess you could call it pseudo resistance for the past couple of weeks that it kept getting rejected at. It touched it a couple times, but it just kept getting rejected. That's nice to see. There you go. Rocket Lab. $21.12, up a full 10% on the day. That means the contracts they got yesterday are not being taken lightly. Same thing with Palantir and the NATO contracts. Nvidia right here, 111, Hood 4462, Coinbase 178, Netflix 962, Bitcoin 86K. Rocket Lab, the big mover of the day at 21. JP Morgan's up a little bit. SoFi is trying to get back above 11. SoFi's really been stuck in the gutter, dude, for a while. Like, I think they're going to need a good earnings to get back to the 15s. But if SoFi can't make a meaningful move after the next earnings and we're in a good macro, there's an issue. Like, there's a real issue with how the market is perceiving this company. And this is the quarter where they've got to show the loan platform is substantial, yada, yada. William Blair did come out with a note today, and they said, hey, the fee-based revenue, aka the loan platform, should be a multiplier effect for the valuation. It should be something that is thought about more deeply when it comes to the valuation, is essentially what he said in his note today. So, I mean, I think this is the quarter where they've got to show that the loan platform mitigates their risk and increases their revenue without having to deal with all the delinquency and portfolio risk on their balance sheet. Rocket Lab right here up 9.7%, $21. But if that happens and we have a good macro, I do think SoFi gets closer to 15. It should get a lot closer to where it was before all this volatility. Do you have any SoFi, Mitt? Yes, I have SoFi. I have my options on SoFi. Again, if SoFi gets to 20, I will make $50,000. If it doesn't, I will lose $3,500. I think it's a pretty asymmetric bet. We were pretty damn close in January. We were at like $17. So I don't know. I still think we're early in the year. He has a shot. Just got to see if it can happen by January 2026 for those options. Rock Lab right here, still up 9%. Hoodie 44.42. That's up about 0.5%. When is Grab returning to 5? I think that Grab needs to have an earnings that increases their EBITDA guidance for this year, adjusted EBITDA. And if they do that, I think we get back to 5. But they sandbagged heavily, a little bit too heavily, quite frankly, in Q4. Like, I did all my numbers and I did not expect those numbers. And neither did the analyst. Dude, four of the first questions in that call were like, hey, are you sandbagging? That's basically what the analysts were saying. And then Grab was trying to be like, well, we take this approach to beat and raise. It's like our philosophy. It's like, okay, you're sandbagging. So I think once they stop sandbagging, the market can pull in the actual numbers they need to put in to get to a $6.50, $7 price. And hopefully we get to that towards the end of the year. Coinbase right here, 177. Bitcoin just at 86. Bank of America, 38.29. That's up 4%. Webull halted as it falls 25% to the downside. So Webull getting halted currently right now. Yeah, let me check resistance to Hood at 45. We are pretty close. 45 resistance on Hood is 17,000 shares. It's not a ton. 17,000 shares. Webull is halted right here on the way down. I mean, what do you think of the Meta antitrust case? I talked about it yesterday. I think it's really stupid. I think they are trying to retroactively blame Meta for buying WhatsApp and Instagram when Meta was 1/20th of the company that they are today. I think that's insanity. Like, that's not capitalism. That's not America. That's just the politicians being mad that Meta has a lot of power right now. So I think it's stupid. I think it makes no sense. But it could be an overhang on the stock. And that could be the issue that we see. But I don't think it's going to be successful, dude. Like, are they really going to break up Meta? Like, dude, billions and billions of people use Instagram, WhatsApp, and Facebook every day. Like, they're going to break that up? Like, that's preposterous to me. Also, Meta put out a ton of pictures in one of their slide decks yesterday about how much competition they have. And although, yes, they are a very, very large company, they have a ton of competition, dude. Like, a ton of competition. I mean, one of the quotes they said was, in reality, more time is spent on TikTok and YouTube than on either Facebook and Instagram. If you only add TikTok and YouTube into FTC social media market definition, Meta has less than a 30% market share. So I don't know what the politicians think about Meta being some monopoly when TikTok and YouTube is what takes a majority of the time of users away. And the small amount of time they do get to spend on Instagram, Facebook, and WhatsApp, it's just heavily monetized, which is why Meta is winning. So I think it's dumb. I don't think it makes a lot of sense. But Meta has pissed off a lot of people over the past couple of years with the political stuff and everything. So you do have politicians that are not the biggest fan of this company. Tesla right here goes green, 253 on Tessie. Grab goes green. Rocket Lab, wow, 11.4%. What a day for Rocket Lab, dude. It doesn't look like this is going to get faded either. It looks like either funds are buying in or retail's buying in. Someone's buying in right here. It doesn't seem that fake given how much it's outperforming against the entire market right now. It means Zucks didn't donate enough to the administration. Yeah, exactly. That's most likely what's happening right now. Retail investors have injected over $20 billion into U.S. equities over the fast 5 trading days, marking the highest level of retail buying since 2020. I think I saw that headline this morning. I believe that's from JP Morgan. Let me see if I can pull that up. But retail's been buying the dip, dude. Retail's been buying the dip aggressively. Yeah, I think that's from JP Morgan. 20 billion over the past 5 days. I'll try to see if I can confirm that. We know that March it was 42 billion, which was insane. So retail's been buying the dip. And again, like there's going to be a FOMO effect now. If you miss Rocket Lab at 15, 16, 17, 18, for the past 2 weeks, you had the opportunity. Now it's at 21 off some big contract. I mean, naturally, human nature is going to be like, all right, fine. I'm going to get into it at 21. And that just creates this compounding. Same thing with Hood. I mean, like if you missed it at 34 and you missed the rise to 60, it came all the way back to 30 and you still were too scared. Now it's at 45. You're like, all right, at least 45 is not 60. I'm going to get into it. And so like, I think if the tariff volatility subsides, we are going to see some of that FOMO enter in the market again, not just from retail. I mean, the hedge funds sold a lot of their stocks near the bottom around S&P 5,000, S&P 510. They might want to get back in as well because they can't underperform. They're just not going to be able to justify to their clients. There you go. Hoodie over 45. Hoodie over 45 breaks the resistance. And then Rocket Lab 12%. Let me check resistance for 22. It looks like Rocket Lab wants to feel like Taylor Swift right now. 22, 15,000 shares. That's not a lot. It's not a lot. 15,000 shares. That's not crazy. That can easily be gobbled up. 13% now on Rocket Lab. The margin calls also have stopped and now we're more stable. Yeah, that's very true. I mean, back in April 3rd to April 8th, the margin calls were aggressive. Very, very, very aggressive. And like I have a friend who he got stopped out of his hood. He got half of his hood, I believe. He got stopped out of it. And another friend who got, I think, like a fourth of his Nvidia he got stopped out of. Or not stopped out of is the wrong word, but like he got margin called on it, right? So it's like the brokerage had to take some of the shares to cover his maintenance. So I would imagine that was happening on heavy levels across the hedge funds who are over levered, which definitely we had to have some hedge funds who were over levered. Citadel was down 8% for the quarter. And there was another one that was down 8%. Oh, Renaissance Technologies was down 8% for the quarter. So if the big guys are down that much, then obviously it's affecting everybody. Wow, Palantir 96, baby. 90 freaking 6. What a day. Hoodie 45, Rocket Lab almost 22, and Palantir 96. Okay, seeing some momentum. The S&P's now the S&P is moving. Yeah, now Tesla's moving as well, 255. So the S&P is not flat anymore. 542, up 0.5%. Webull down 20%, unhalted. Newsmax up 10%. Netflix up 4%. Wow, dude, Netflix doesn't move 4% in a day. That's a big move. Netflix, and this is off of a leaked article from the Wall Street Journal about Netflix's like ambitions. Like that seems like not a reason to pump. Like any company can say we want to be a $1 trillion company, but I guess the market is feeling confident that Netflix is saying this, or potentially it's quote unquote leaked, if you know what I mean, before earnings, because Netflix is going to have a really good earnings. Maybe that's the argument. And that's why people are speculating on it right now. Mick, get the Saratoga bottle. Dude, I know if I get the Saratoga and we tank, I will not be able to hear it from you guys. Like it will be every other message I'm going to get is like, it's because of the Saratoga. It's because of you. And I'm just going to have to live with it. So I'd rather just not get it. Some good water though. So yeah, see, look at Dexter. Please don't do it. Like people just attach to any little superstition and they find a way to blame someone because it's easier to blame someone. So I can't do the Saratoga. I just can't do it. Rocket Lab, I think it wants to get to 22, bro. 14% right here. It looks like it wants to get to 22. 15 cents away. At least put on your Lululemon hoodie, dude. I don't even know where it is. I feel like it's in my closet somewhere. I should probably I need to go do something today. I'm going to wear that freaking hoodie, dude. $150. I should probably freaking wear that hoodie. Like it would behoove me to actually use the hoodie I paid for. Hoodie 45.50 we touched 45.33. That's up 2.7%. Nvidia is the one that's not really moving at all. I mean, it's up a little bit, but still basically stuck at 111. Netflix right here 965. Palantir 96.30. Rocket Lab 10 cents away from 22. I think we get there. Let me check Palantir resistance to 97. Rocket Lab's 5 cents away, 3 cents away. I think we do it. 1 cent away. I don't see it yet. Palantir, by the way, 97 resistance is 50,000 shares. 50,000 shares. Rocket Lab, there you go. Rocket Lab, $22 on the Lab of Rockets. 2206, 15% on the day. There you go. 22 Dolores on Rocket Lab. I guess that contract was a big freaking contract. I mean, it sounded like a big contract when I was reading it yesterday on the market close. It's like, oh, it sounds like a big deal. But the reaction we're getting currently right now, Rocket Lab, $22 up 15%. And again, see, this is emblematic of what it means to buy the dip, right? Rocket Lab is a good company. It's a real company. It's not as safe of a company as Google or something, but when you have all these people, Matt Money, got to give him credit, right? He's been preaching this thing since it was $4. When you have really smart people like diving into the thesis, making content about it, when a stock like this dips, it's not really the end of the world. It's like, all right, I have an opportunity now versus I'm necessarily scared, because in one instant, they can get a contract that changes the trajectory of the company, obviously changes the trajectory of the stock price. But the only reason they would get that contract is because of all the due diligence people have done on why Rocket Lab deserves this level of momentum. And so Rocket Lab right here is proving the theory that sometimes buying the dip on a good company that, yes, is risky. It's not as safe as like Google, but it's also not as risky as Webull or Newsmax. Might not be the worst thing in the world. Robinhood right here, 45.15, Nvidia 111, and Palantir 96.28, falling a little bit from that 96.50 range. Same thing with Rocket Lab, just below 22, but still some green momentum on the day. SoFi's back to 11. SoFi right here, there you go. Yeah, just hovering above that $11 range. Why is Apple down? You know, I think there's still not that much clarity on the tariff. So what's his name? Trump said that Tim Cook is like a good friend of his and that he's very flexible when it comes to tariffs, but that's all he said. And that doesn't really mean that Apple's fully exempted. In fact, most people are thinking that Apple's still going to have to pay 20%. Now, the way that Trump was talking, it kind of feels like Apple's going to be exempted, given he kept using the word flexible, but we just don't know yet. So maybe the lack of clarity on the tariff stuff is creating that issue. This is what Trump had to say yesterday about Apple.
In Canada, Mexico, and other places come here, but they need a little bit of time. Something like that.
What about any Apple products, other cell phones?
Look, I'm a very flexible person. I don't change my mind, but I'm flexible. And you have to be. You just can't have a wall and you'll only go. No, sometimes you have to go around it, under it, or above it. There'll be maybe things coming up. I speak to Tim Cook. I helped Tim Cook recently, and that whole business. I don't want to hurt anybody, but the end result is we're going to get to the position of greatness for our country.
That to me is him saying, hey, I just want to get Tim Cook to further negotiate with me, but we're not going to tariff the crap out of them. Like, I really don't think he's going to tariff the crap out of Apple. I think he knows it's not going to be good for the U.S. economy. So saying he's flexible to me just says he will be very likely to have a conversation in some way. I mean, look, he's probably going to say, hey, Apple, if you invest $250 billion, we'll get rid of the tariffs, yada, yada, do a whole press release or something, and then he'll claim victory for it. But the market just doesn't know, which is why I think Apple's selling off still, but eventually I think there will be some deal. Bitcoin just below 86, Netflix 967, Hoodie just below 45. We're seeing a little bit of red candles across the board. Rocket Lab peaking out at 2210, now back at 2165. If it closes above 20 on the day, I think everyone would be happy. And then Palantir right here at 9615. Currently right now. Do you have a position in HIMS? I don't. One of my friends, though, who I respect when it comes to investing, just initiated a position on HIMS, I think during the April 8th time probably when this thing was like 24, 23. I don't know, dude. I just like, I haven't, if I initiate a position, I would have to really start caring about this thing. And it's not hard to care about it because there's a big community around it. I just feel like there's other opportunities here. But I agree, it's a good buy. I think it's cheap, dude. I think if you look at their growth, you look at their momentum, you look at their verticals, look at their market cap, price of sales is only 4.3, which is very cheap compared to a lot of these other growth stocks. Like I don't hate the HIMS buy at all. I think it makes a lot of sense right here. I don't know. I'm just not that excited about the industry. Yeah, Roy's in it. Roy loves it as well. I have a bunch of friends who are in this name. It's just not the most interesting name in the world to me. And it's incredibly volatile too, with all the Ozempic stuff and the headlines from the FDA, yada yada. But as a growth stock, it's an incredible stock with very appealing numbers. Nvidia right here, 112. Robinhood trying to get back to 45. Palantir 96.47. Maybe we see that $97 range. And Rock Lab right here, 21.73. What stock is your strongest conviction right now for accelerated growth over the next year? You know, I would love everyone to answer this as well. I think there's a couple of names right here, and they're not any surprise, but obviously Nvidia, like they're growing the most in the entire stock market, right? When we talk about like, you know, big tech companies, real growth, like very, very few companies are going faster than Nvidia. Second, I do think Palantir. I made a video in January saying I think Palantir can get to 40% growth. It was 20 minutes of my explanation for why I think they can get there. I still believe there's a chance to get there. Look at Tanner saying, Tanner, I didn't see your comment before I said Nvidia. I didn't see your comment before I said Nvidia. But yeah, I think Nvidia's there. I think Palantir's there. Obviously, the multiple on Palantir is more extreme. So they kind of need the growth to be able to get there. But I think Palantir can grow. And then I think it's Hood if we have a bull market. Like if we have a bull market, Robinhood grew, they grew, what is it, 45% last year? I think they can get to 35 to 45% again as long, I mean, even April, which I was bearish on going into April because I was like, okay, Bitcoin's down, trading volumes are down, yada, yada. Robinhood's the #1 app on the App Store. Are you kidding me? Like all this volatility ended up being a catalyst and a tailwind for them versus a headwind. So now I'm thinking Q2 is not going to be that bad because if May and June are okay and Trump walks back all the volatility, we should get a ton of trading volumes. And as a result, that should be able to get Robinhood to get to that 30, 40% growth. So I think Nvidia, Palantir, Hood. I think I know those are basic answers, but I think they can get there. Tanner says, I will send your check. Thanks for pumping. Tanner did make a good video yesterday on 5 growth stocks to buy right now. Top 5 stocks to buy currently right now. So Tanner technically answered this question for me right here. This is his video. Let's just all stare at Tanner right here. There you go. Amazing mustache, Tanner. We love it. I'll put the video right here in the chat, but you guys can look at his 5 growth stocks that he is currently excited about right now. But yeah, dude, I think Nvidia, Palantir, Hood. I don't think there's crazy answers to this question, but I think those 3 can be out there. Netflix, wow, $9.70. We forget Netflix was $1,000 this year. Like Netflix was at freaking almost 1,100 back in February. Granted, everything was up in February, but still, like if it gets back to 1,000, it's just getting back to where it was earlier this year. S&P is up 0.5%. Meta 533. Tesla 254. SoFi 1096. Rocket Lab 2158, still holding on to that 21 level, but it's down from 22. And then you got Hood at 44.73. What else is a major accelerated growth stock this year? Like I'm talking about 30% growth minimum, right? 30% growth minimum. Tanner says actually 8 stocks. Tanner, why'd you put top 5 in the title then? It's freaking clickbaiter, bro. 5 does sound better than 8, to be honest, though. 5 is like a nice number. 8 is a little weird, so I understand why you did it, but it's still clickbait. Tanner reminds me of that teacher from The Incredibles, LOL, the one that Dash puts a pin on in his chair. It's just the glasses and the stash. Hold on. Who is this teacher? Teacher in The Incredibles? I forgot what this guy left. Oh my gosh. Oh my gosh. Tanner, I'm sorry. We got to do it. We got to look at it. Dude. Oh my gosh. All right, this is definitely Tanner. This is Tanner, bro. Holy crap. Dude, I haven't seen The Incredibles in so long, but this is Tanner. Yo, Michelle just nailed it. The other one was Ned Flanders. They called me and Tanner Ned and Apu from The Simpsons. So yeah, Ned Flanders and The Incredibles, dude. That's amazing. That's great. That's freaking great. Tanner will be at the Toronto meetup, by the way. So if anyone comes through, you will see Tanner there. I'll make sure that he's late, but it'll be fun. It'll be a super fun time. Tanner's a great guy in person. Tanner's awesome. And dude, like me, Tanner, and Roy, legitimately for the entire 3 days we spent together, I think 80% of the time we talked about stocks. Like we geeked out over gross margins. Like it was ridiculous, dude. And a freaking breakfast, we were talking about a firm's gross margins. Like it was like, I think the waiter was just like, what are these guys talking about, dude? So if you have any questions to ask him about stocks, he will geek out with you. And to be honest, the meetup, it's just a geek out about investing in stocks. That's really what it is. Like it's like if you don't have a community of people you can talk to about with this stuff, investing, stock market, Palantir, Hood, all this stuff, though the meetup seems to be so far the place where everyone just wants to talk about this stuff. I mean, we had one dude at the New York City meetup literally doing a lecture on selling puts, and he had like 5 people in front of him. It was crazy. So I think it'll be a fun time in Toronto. Also, I don't need to get an Airbnb because I have a friend who hit me up who I know decently well over the past couple of years. Apparently, I didn't know he was rich, but he's rich. And he has a 3-story penthouse in downtown Toronto. And he was like, yeah, you could just chill with me. I was like, all right, bet. Like, that saves me a good $600-700 on the Airbnb. So yeah, I'll definitely be taking some pics from this 3-story penthouse in Toronto. I didn't know he was that rich, bro. Like when he showed me the address, I was like, oh, he's rich. I didn't think he was that. He's rich. So yeah, it should be a fun time. It should be a fun weekend. And he should be super cool. He's trying to sugar daddy. No, he's my age. He's a good friend. And we connected like about a year ago. Stock market, Palantir, all that stuff. That's how we got connected. But I think it'll be fun. Palantir right here, 9630, Nvidia 111, and then Rocklab 2168. All right, what are the comments you guys said? What are some of these stocks? You're saying Affirm is Affirm a growth stock? Affirm's only growing like 20%. They're not growing like 30%. No one said CrowdStrike. I thought you guys would say CrowdStrike. CrowdStrike is still growing above 30%. CrowdStrike right here, 389. So CrowdStrike's there. Grinder match. Yeah, of course. It's a grinder match. That's it is not Tevis. It's not Tevis. Does Tevis have a 3-story penthouse in Toronto? That's crazy. It's not Tevis. I promise it's not Tevis. But I didn't know Tevis. If Tevis has a 3-star, then Tevis is rich. I thought Tevis was rich. I didn't know he was rich. But yeah, it's not Tevis. SMCI. Well, SMCI is growing like crazy. That's a good one, but their gross margins are disgusting. That's the issue with SMCI. And also, if Nvidia is in a slump, I think SMCI is going to be. There's no way SMCI goes up 20% if Nvidia is still stuck at like 110. So I feel like that's contingent on Nvidia. SoFi, what is SoFi expected to do this year in terms of growth? Is it 30% or is it like 25? I think it's like 20% is what they guide. But then again, they guide conservatively. So I wouldn't be surprised if I see 30% growth on SoFi. Canada just dropped reciprocal tariff. So they didn't drop it. They delayed it for 6 months. But yes, that is bullish to see that happening. SoundHound. Yeah, dude, these are just not amazing quality companies, in my opinion. Like, even if they grow, the valuations are kind of ridiculous. Like, are we really going to pay a 40 times price of sales for SoundHound? Like, people saw Nvidia invested in SoundHound and they just went googly eyes. And it's like, I don't know if that can be the only thesis. And SoundHound is down for the year because their earnings sucked a month ago. And they're already trading at a pretty aggressive multiple. So I don't know. You want to see like really good quality names that grow, which is hard to find, right? That's why we only have a couple answers to this question, but it's hard to find amazing companies that you can trust that are actually growing aggressively, which is why the street gives them a multiple, because it's hard to find them. What about the quantum names? I don't think they're growing at all, but they have a lot of momentum. Rigetti right here is flat on the day. QBTS. Most of these companies don't even have earnings. but they're still holding 5, 6, 700% above where they were last year. But I don't think we're going to get a ton of growth. Double check the Canada news. I think that's wrong. Let's see. Canada. No, I think it's correct. This is from Bloomberg. Yeah, it's correct. Canada is providing a 6-month delay for certain retaliatory tariffs. Not all the tariffs, but goods for manufacturing and food and beverage packaging. So we talked about that like literally right before the market opened. That seems to be accurate. But obviously they're not dropping all the tariffs that are there. Rocket Lab. What is Rocket Lab's expected growth rate this year? I think it's above 50%, right? Like this quarter, I think they're expecting triple-digit growth, but that's going to slow down a little bit. Yeah, Rocket Lab's also a good growth name. I think if they get profitable, that makes it a lot easier for different people to buy in. Thoughts on Spotify? I have got this stock so wrong for so many years, and I just have to admit I'm wrong on this. I thought that Spotify was never going to be gross margin profitable because of the record labels sucking all the money out of their artists. And I didn't realize, dude, Spotify is a real tech company that is able to have a lot more leverage against the record labels than I thought. So phenomenal company. They're going to get to 1 billion users. They're at like 600 million. They're going to get to 1 billion in the next couple of years. I don't use Spotify. I use YouTube Music, but for some reason, people love Spotify. Like, how many of you in the chat love Spotify? I just think of it as a music app. It's not that serious, but there's a certain feel on. It's almost like Robinhood, right? Like people are like, oh, well, why is Robinhood so special? But like until you use it, you don't get it. On Spotify, yeah, there's a certain feel of how you organize the playlist and the music and stuff that gets people addicted to the product. And then they've got all the podcasts. That's been a new vertical for them. And they have leverage with the record labels. They do. That was the one thing I got wrong 2 years ago. Is like I thought they didn't have leverage with the record labels, but they do. So I like Spotify. I wouldn't really buy it here. I think there's just other opportunities, but I wouldn't bet against them. And Daniel Ek is just like a rock star. He knows what he's doing there. So I think he's going to continue to crush it. I would love to interview Daniel Ek, bro. That would be cool. He's done a lot of interviews. Maybe that would be a fun one to try to do. The reason I don't have Spotify, and some of you guys might agree with this, is because YouTube Music is free with YouTube Premium. So to me, I'm like, if I already have YouTube Premium, why would I pay for Spotify when YouTube Music comes with it? Unless the user experience of Spotify is literally that much better. And like, I don't know, I'm not that big of a music. Like I listen to music here and there, but I'm like, some of you guys have music playing throughout the entire day. I don't. I have like stock market content playing throughout the entire day. So for the people that really love their playlists and their music, then yeah, I guess Spotify is not a horrible option. 675 million users, but apparently only 263 million paid members. Yeah, exactly. So there's less than half of them that actually pay for the service. Most of them are ad supported. So eventually they'll keep just, budging you, and most people will probably pay. The reason I paid for Spotify back in college is because they gave Hulu free with it. So it's like $5 a month for Spotify and Hulu. I was like, that's a hell of a deal. So in college, I needed a college ID to get that. So they obviously were targeting college kids to be lifelong users. But then once YouTube Premium allowed YouTube Music, I was like, why would I keep Spotify? So I left it years ago, but obviously there is a passionate group of people that still like Spotify. Shopify for growth. So Shopify is not doing 30%. They're doing 20%. When I'm looking for real growth, I'm looking for 30%. But Shopify is an incredible company as well. But see what I'm saying? There's not that many companies that are growing more than 30% and are quality names. There's Nvidia, CrowdStrike, Palantir, Robinhood, and then what else? Right? Like SMCI, but I don't think it's that much of a quality name. And I think it's more so a contingent of Nvidia. Tesla's not going to be growing at all this year. I mean, unless something changes, we're not going to get any growth out of Tesla. Rocket Lab, I guess, would make that list. But Rocket Lab's not profitable yet. So a lot of hedge funds and money managers, they just can't buy companies that are not profitable. All the semiconductors, Broadcom, TSM, you could say TSM, but I think all of it goes back to Nvidia. Like if you're looking for growth, you would buy Nvidia before you buy any of these because you want growth. And you want a discounted premium, which Nvidia is trading at an obviously discounted premium. Who said 30% is the bar? Consistent 20% growth is fantastic. Yeah, I agree. 20% is fantastic. I'm just trying to up the level right here and say, what are the names? Because I think the question someone that said was, what is accelerated growth? And to me, that's like 30%. Like that's like a premium you'd pay for serious growth. Adobe is growing like 4%. Adobe. Also, did you guys see the new Canva event, bro? Melanie Perkins freaking Rockstar. Canva announced some crazy things. They had an event a week ago, and I mean, it was just stuff that looks like it's not going to put Adobe out of business, but it's definitely not going to make people excited to buy Adobe, because when Canva goes public, that is a product, that is an IPO I think I would buy, to be honest. I think the valuation was egregious in 2021. It's been walked down because of the down rounds that they had to have. And I use Canva every day to make my thumbnails. So this would be a Peter Lynch play for me. And Melanie Perkins, I just like her as a CEO. Like the shit she had to go through to build Canva in Australia back in 2013. Dude, she had to fight to get some VCs to fund her. And then she built it into a $50 billion company. Like I would want to bet on a founder like that. Canvas for amateurs. That's the point. That's the point. Most people are amateurs. This is why I've never loved Adobe. Adobe's too, like I've tried to use Premiere and Photoshop and I'm like, dude, this is too complicated to make a YouTube thumbnail or to edit down a simple video. Like this looks like it's for movies or for like advanced creators that are like editing all these different sequences. Canva is simple, bro. And most people in the world just want simple. Also, Canva, their daily active users, monthly active users, this number might surprise you guys, 220 million, bro. That's wild. 220, that's a $250 million people use Canva. That's insane. So this is definitely a name that I would be interested in if they end up going public. There it is. You like her because she's Australian. Okay, I might have a soft spot for the Aussies, but no, I actually do like her. She's dope, dude. She's like, you don't find many people that go through what she went through to build this company. So I would love to take part in her journey. SoFi right here, 1102. Where's Palantir? Are we still? Oh wow, Palantir making a run for 97. She's trying. Nvidia 112, hoodie still above 45, and then where's Rocket Lab? Are we holding 21.47? All right, so down from 22, trying to get to 20. Down from 22, trying to get back there, but 21.50. Palantir again. Let me check resistance. I think it's about 50,000 shares. 97. Yeah, 56,000. All right, 56,000 to get there. Oh, Margot Robbie is amazing, dude. I love Margot Robbie. I think my first introduction to her was Wolf of Wall Street. Is just one of the best actresses on the planet, dude. She's amazing. She's also from Australia as well. Yeah, Canvas for presentations, slide decks, thumbnails. I mean, like, there's a billion different things you can make on Canva. And now they have all this AI stuff, so you can just type in, hey, I want a dog eating a cake, and then boom, it pops up. Like, actually, let's do it right now. I'm going to do it right now. I'm going to open up a random one and see how good their AI is. But there's just a lot of different things that they can do, which is why it's exciting. And it's only $13 a month, bro. It's not that expensive. Adobe's $30 a month. That's with a discount. I think it's more like $35 a month. So I think it's just very simple. Did you like the Barbie movie by Margot Robbie? You know, I never watched it. I tried watching it, then I got bored. It was like a year ago. So yeah, I never watched it, but it was a big success. I mean, it was a big box office success. But yeah, I didn't watch it. Dennis, thank you for the super chat. Centennial 1. Okay, so this one is also in the cybersecurity space. Now, the problem with this one to me, even though the growth is there, is I don't know why I would buy this over CrowdStrike or Palo Alto Networks. Like, to me, I feel like if I'm betting cyber, I'd still bet CrowdStrike over this name, unless the growth is that much better than CrowdStrike. Because if they're growing the same as CrowdStrike, I don't know. I feel like I'd rather pick CrowdStrike. But this is not a horrible name at all. This one had a good year last year, but then it fell in February. Palo Alto is growing at like 15%, though, so that's not giving you 30% yet. Trump says Harvard could lose its tax-exempt status and be taxed as a political entity. Oh, yeah, here we go. Here's the Trump tweet. Perhaps Harvard should lose its tax-exempt status and be taxed as a political entity if it keeps pushing political, ideological, and terrorist-inspired supporting sickness. Remember, tax-exempt status is totally contingent on acting in the public interest. Okay, so Trump continuing to argue with Harvard. You know, I don't really disagree with him that much on this. Like, I don't know why we're giving money to Harvard. I really don't. They have a $60 billion endowment. Why are they getting federal funds? Like, when we talk about waste in the government, we don't need to be giving Harvard money. Like they've invested billions of dollars. They have alumni that are incredibly rich that give billions of dollars to them every single year. Why do they need taxpayer money? Like, I've never understood it, ever. And I don't really care about the whole, like Harvard is teaching kids about yada yada. Like that's a whole political thing, right? And Trump obviously cares about that. I'm just like, from an economic perspective, why do the Ivy League colleges get money from the federal government? Why? Like, they don't need it. They have more than enough donors, alumni, and endowments to sustain themselves. So the whole student loan system is broken, but like in particular, the Ivy Leagues, I don't think they deserve our money. It doesn't make a lot of sense. But I think he'll get a deal done with Harvard. I mean, Harvard obviously doesn't want to lose its tax exempt status. Neither does Columbia. So they'll probably get some deals done soon as well. Rivian, where's Rivian? Rivian's not growing that much, and Rivian's not profitable yet. But by Q3, I think they have a shot to be net income positive. I think they had their first gross margin profitable quarter last quarter, but they're not growing anywhere near that 30% range. Palantir right here, not getting to 97, got rejected at, wow, 96, 92. It got close. Then it got rejected, but it looks like it wants to get there. Nvidia 112, S&P 542, up 0.5% on the day. All right, let's get some more updates on the tariffs, and then we'll look at some other headlines we've got going on right now. And then we'll keep going from there.
$1 billion stake in HPE. That's according to a source familiar with the matter. Stock's down more than 25% year to date. But guys, wanted to dive into inflation today because it was a kind of quiet data release. We did get import prices, and that's very much in focus because A, it's an inflationary input, and B, a lot of people think they're going to surge because of the tariffs, obviously. It's what we pay on imports coming in. We got a really good surprise there as far as lower inflation. A negative number, negative 0.1. This is, of course, was taken in early March before the tariffs started coming in. But I think it's more proof that heading into this tariff wave we're seeing, inflation has looked good, down. When I say good, I mean weaker. If you take out energy, because we know energy, petroleum was a weight on prices during the month, it still was pretty flat. 0.1% increase in import prices. I say it also because it's the third piece of evidence we've seen, CPI, PPI, and now import prices, that the setup into tariffs is one of lower inflation. And that's good, because one of the worries was that we were going into this tariff environment at a high point of inflation, or a phase where inflation was starting to pick up.
We got red candles across the board, folks. I wouldn't say we're dumping yet. Is it almost 10:30? It's almost 10:30, but we got red candles across the board. Very close to the 10:30 slam, but yeah, we'll see if we can maintain any of this momentum today.
Not seeing evidence of that, so that's a good thing. The question is, what now? And I'll just show you one chart from the Bank of America Fund Manager survey that they put out, which was very bearish overall on the economy, on stock exposure. This is the fund managers expecting higher global inflation.
I don't think this headline's enough to be. EU expects U.S. tariffs to remain as discussions make little progress. Oh, wait. I read the word little wrong. Yeah, that's definitely. Yeah, there's your headline right there. Hold on. There's your headline. That's the reason I missed that word little. If the word little is there, little progress. Yeah, look at the S&P losing almost everything, bro. 80 cents away from going negative on the day. My goodness. This is how volatile this market is. Let me see. EU talks are making little progress. I wonder who's giving this quote. Like, is it an EU official that wants this to be leaked? Is it someone who's close to the situation? Like, who's giving this quote for why the talks are making like the United States would not come out and say that, hey, we're making little progress, right? They wouldn't want to give up their leverage like that or increase volatility. I think it's someone in the EU who's telling the media, hey, the talks aren't going well. And that's what's causing this pain right here. Goodness, bro, that one quote, that one freaking quote. There you go. S&P goes red. This is just, oh my gosh. Where's Rocket Lab? Where's Rocket Lab? Oh, there you go, Rocket Lab. Below 21. Palantir's probably below 95. There you go, 94.88. Hoodies probably in the low 44s. Nope, hoodies red, just about to go below 44. Tesla is losing its steam, 257 to 253. This is so annoying, bro. Covered calls printing like clockwork, bro. Guys, when you say Walter Bloomberg is zero source, you guys need to understand what that account is. That account is just copy and pasting the Bloomberg terminal. This is not an actual reporter. All he does is copy and paste the headlines from the Bloomberg terminal. He's not even dictating the market. He has a big following because people don't want to pay for the Bloomberg terminal like myself, so I follow this guy. So when you say he doesn't have a source or when you say he has fake news, it's Bloomberg. It's the terminal. That's why his name is Walter Bloomberg. So don't try to delegitimize his post by saying it's fake. Like, if anything, you're saying Bloomberg's fake. But at that point, you're saying the terminal headlines are fake, which sometimes they're fake, but most often than not, the terminal headlines are second by second pretty damn accurate. So yeah, Walter Bloomberg is not trying to move the market because there's a billion accounts that are tweeting the exact. Let me show you this right now. There's a lot of accounts on Twitter that literally just tweet the Bloomberg headlines. So if I search that headline right now, EU makes little progress. You see all these accounts, the first 4 accounts, exactly the same thing that Walter Bloomberg tweeted, and none of them have a source because Bloomberg doesn't have a source for it. Now maybe Bloomberg is, wrong here because they don't have a source, but all of them are just reporting what Bloomberg says. But that's why it's affecting the reason I'm saying this, that's why it's affecting the markets. It's not because Walter's tweeting it. It's because the Bloomberg terminal has a massive impact on every second by second trade that happens in the market. That's why it costs $25,000 a year. And so as soon as something hits the terminal, the algorithms get affected immediately. Now we are seeing a little bit of recovery. Look at that green candle on Palantir. 94.75 back to 95.70. Hood 43.99 back to 44.33. And then the S&P, look at that, goes green. Wow. What a kangaroo market. Went all the way red off that headline, and it's not rebounding fully, but 538 to 540.5 is a nice little move on the S&P. Dude, this freaking market. This is hilarious. This is hilarious across the board. Let me see if we have any coverage on this EU news. I can't believe that one headline was enough. But this is why people love day trading, because they find a little headline and they'll take their position and then they'll immediately exit and end. Like, imagine you went long at 538 on the S&P literally 2 minutes ago, and now you can get out at 540. But imagine you went long with like hundreds of thousands of dollars. Like, you just made tens of thousands of dollars of profit within seconds. This is why people get attracted to day trading. The problem is it's really hard to nail all the timing, but that is what we're seeing right here. Yeah, Bloomberg reports U.S. officials signaled most tariffs will stay after a 2-hour meeting. Oh, wow. Okay, we have some more updates. So let's see. Let's see if we can get some more coverage on this. U.S. officials signaled most tariffs will stay. Okay, so that is a source close to the EU. Here you go. EU and U.S. officials made little progress in resolving trade disputes. Bloomberg reports U.S. officials signaled most tariffs will stay after a 2-hour meeting. The EU trade chief Marko Sivakif left unclear on U.S. goals. All right, there you go. S&P back to almost going red. Yeah, see another headline that just came through the terminal saying that a 2-hour meeting resulted in nothing. That's what's getting people to be more bearish. All right, man. This is the market we're in. These are the headlines we got to look at as we get all of this new incoming data.
In blue, you can see the spike there on the back of the tariff announcements. And then the percentage of those fund managers, Carl, that expect short-term rates to be higher, that's not going anywhere because that comes along with expectations of a weaker economy. So far it's in the surveys, right? University of Michigan, consumer confidence, fund managers, everyone's expecting higher inflation. We haven't seen it yet, but we also haven't really started to see the impact of the tariffs.
Yeah, I think it's the 5th most bearish B of A survey in about a quarter century. Interestingly, the expectations for...
Wow. 25 years, the most bearish B of A fund manager survey. it's definitely telling that sentiment is not necessarily the best right now, which could be where the alpha is, but it's also showing that people are not really believing that the volatility is gone yet.
A hard landing. We're 11% last month, and it goes from 11 to 49% in 1 month.
Yeah, no surprise there. People are getting more worried about the economic outlook. I think it was 82% of respondents expect global growth to weaken. No surprise. But I just wanted to stick with inflation because the expectations for the Fed are moving around a lot. So I think it's worth diving into today. First of all, New York Fed also does an inflation survey that was out yesterday. In case you missed it, 1 year expectations rising to 3.6% in March. That's a bump up from 3.1%. It's not like the bump we've seen in University of Michigan, for instance, in terms of inflation expectations, but it's worth watching. And then on the good news front, the market, if you look at some of these swaps markets, five-year inflation expectations, not too worried about inflation. I mean, if you look at the market and even 1 year swap, here's five-year. You see the spike in 2022, right? Remember that inflationary period we went through? It's actually been trending lower lately. And you see that in the short-term 1 year chart as well, gauge of how markets are perceiving tariffs affecting prices. It's actually fallen sharply. So there could be something to this, on again, off again tariff strategy that President Trump is employing now, where exemptions, delays, where maybe it isn't persistent inflation, it's just sort of one-off shocks. That's certainly something that Fed Governor Waller talked about yesterday. I thought this quote was really interesting. He said, "I can hear the howls already." He was talking about cutting interest rates, right? That this must be a mistake given what happened in 2001 and 2022. But just because it didn't work out once does not mean you should never think that way again. When he's talking about sort of missing the boat on inflation being higher than they originally thought, he used a tush push, which I had to, go deep on this morning to understand. I grokked why it's so controversial, but I think his metaphor was basically like, I'm going to stick with transitory on tariffs and worry more about growth expectations. He's definitely representative of the dovish camp, and he's been a thought leader before.
And that's good for all of us because we want, obviously, some of the Fed presidents to be dovish so we can get that juicy rate cut. But if he's wrong, S&P goes red again. If he's wrong about the inflation from tariffs being transitory, then we're going to have higher inflation expectations and the Fed is going to be wrong to cut. And this is the conundrum that the Fed is in. They want to cut because they know that the CPI and PPI is making it very easy for them to say, hey, the federal funds rate should not be double the effective inflation rate. But they're afraid that inflation is making a lot of progress back to September 2024 levels, but it is going to be hindered with the tariffs raising the average inflation rate closer to about 4%, which would be insane. If we get back to 4%, that's like June 2023 levels, which we cannot afford to get back there. So Fed's in a tough spot. You got some Fed presidents that think inflation is going to be transitory in the context of tariffs, and that's why they can cut. Rock Lab right here below 21, still up 9% of the day. But you've got other Fed presidents that would be more eager to take a chance to rather wait than risk it. Is the VIX spiking right now? The VIX is up a little bit. It's still down 8% on the day, but it just spiked almost 0.5% once this EU headline came out. Look what they did to my boy. Yeah, exactly. Dude, red light, green light. That's exactly what this market feels like, right? It's literally like the Squid Game episode, red light and green light. And literally, you could get killed, bro, if you're like on the wrong light. Like, you could lose a lot of money. This is really what it feels like. S&P trying to go green right here, but still down a decent chunk from before. Where's Google? Is Google tanking as well? Googs. Yeah, Google's down 1.2%. Dude, my Google 150 calls, I think they're cooked, bro. My bet was Google will be 150 by January 2026, but I paid $60 in premium because I have amazing timing in January. So realistically, Google needs to be $210 by January. I'm not saying it's not possible. It's just now that the sentiment is what it is, it looks like that's going to be a tax loss harvest instead. Although it is printing some good covered call premium. I mean, I think by the end of the year, maybe if I run the campaign correctly, I could break even with my covered calls against those calls. But yeah, we would need Mag 7 to have a fundamental shift. It's too early to say they're cooked. It is too early. We just really need a full Mag 7 pivot for those to play out. Granted, I'm going to be cooked with Nancy, so we'll both be cooked here. My Google 195 January 2026 call is down 50%. Dude, isn't it crazy, right? At the beginning of the year, it's like, all right, Google 150, 195 in a year. Like, that can't be that crazy. And then, boom, we get whipsawed with, I guess, the most insane tariff policy anyone has seen in their lifetime, at least since Smooth Hawley. And yeah, that kind of changed the entire narrative. Now, again, we get some deals. I think things get back to the Bulls' favor, but apparently the EU negotiations are not working out that well. That's the one thing we don't talk about. Like we keep saying, okay, we need to get all these deals, but what happens if we really can't get a deal? Like, what happens if we sit down with Vietnam, which, by the way, Xi Jinping went to Vietnam yesterday, and that's not good for any of us because he's probably talking to the Vietnamese prime minister and trying to convince him to not be, not give as many concessions to the United States. He's going to Malaysia. He's going to Cambodia. He's going all across Southeast Asia. He's probably going to tell all these countries to hold your ground with the U.S. Like, if we can't get a really good deal, like, because let's just say we get horrible deals or like we don't get to any deals, are we going to leave the 10% tariff on them? Because that's not going to be good for anyone. I mean, that just means inflation is going to go up. My perspective is if we get good deals and really good concessions, we can lower the tariff rates. And then the market's going to feel like, okay, now the Fed can cut without having to worry about inflation. And we can move forward into a bull market with earnings leading the way. But what if Bessent sucks at making deals? Like, what if he's just not good at making deals? I want to believe he's good at it, but what if he's not? So I think that's another thing that we have to figure out. And again, if we get deals, but they're not good deals, that's also an issue. Like, we need, like, the market's not stupid. They're not just going to be like, oh, wow, we got a deal. Great. Like, they're going to ask, hey, well, what did we get out of all this? We gave up $10 trillion in the stock market. What did we get for that? And if it's some shitty deal, I mean, I don't think that's going to be the best thing in the world. VIX is rising. Where is the 10-year? Are we getting any issues there? That'll be when we actually have to worry. Oh, 10-year still tame. All right, it's down. Maybe Bessent telling everyone to be tame yesterday with the VIX peaking is what's helping this. Okay, let me pull up the template I was going to show you guys on Canva because we didn't get to do this yet. So let me show this right here. So this is Canva. We're going to test their AI thing. So we're going to go to Elements, and then you guys can see this, right? Yeah. Okay. Then we go to AI image generator. Okay. So I said dog eating a cake. Let's see what we get. But this is what Adobe is saying is so special about them. And I'm like, well, if Canva can do this for $12 a month, like, I don't know what's that special. Yeah, look at these pictures, bro. Look at this. It's pretty incredible, dude. It's pretty freaking incredible. And I'm sure OpenAI can also do stuff like this, but like all of this integrated in one photo editing app, growing at 220 million users, like, that to me is an IPO I would be seriously interested in. Financials have to make sense though, because they got a stupid valuation in 2021, like a really stupid, like it was worth like 40 billion and they were barely doing $1 billion in revenue. Like 2021 was insanity for funding, which is starting to feel a little bit of like that in terms of some of the AI names that we're seeing right now. But I feel like AI actually is real, so the companies can go into their valuations. Yeah, but 2021 was stupid. So as long as there's a decent valuation, it might make sense. That's solid, but can a lot of companies do it? Yeah, but that's my point. A lot of, like, I wouldn't buy Canva because you can type in dog with a cake. I would buy Canva for all the other reasons I talked about and the fact that you have AI incorporated into the core product, which is why you don't need to go to another product and pay some subscription if it's already there. And so if they already have the users, and most people are coming to Canva not because of AI, they're coming because of YouTube thumbnails or like basic video editing, basic photo editing, and then they're met with all these different AI tools. Like, it seems like a decent flywheel for them to be able to build on. and continue to engage users. Okay, cool. I think that's the main headline from there. We got this video of Elon sharing his thoughts on tariffs, but this is an old video. I haven't watched this though, but let's take a look at this. This is from the Joe Rogan pod. I don't know how long ago this was. They didn't just do a new pod, did they? No, right? Hold on. Joe Rogan, Elon. I don't think they did a new pod. No, this is from a couple months ago. Okay, but this is Elon's tariff take. I actually don't know what he thinks about tariffs, so I think this would be relevant to kind of take a look at and see how much he is for free trade or for tariffs.
On tariffs, I know that's very controversial to even people, economists. They disagree. Some agree. Some think it's a good idea. Some think it's a terrible idea. What do you think?
I think you need to be careful with tariffs. I deal a lot with like supply chain issues. You know, like the global automotive supply chain for Tesla, for example, is incredibly complex. So when there are sudden changes in tariffs, then you're like, well, we've got a factory like somewhere else that's making a part that goes into the car. Now that suddenly, if that part's suddenly twice as expensive, it like messes everything up. You know, so you want to be have tariffs be predictable. So that companies can adjust their supply chain. I mean, I think companies are more than happy to increase manufacturing in America. It's just that you can't do it instantly. So if you put up giant tariffs immediately and don't give companies a chance to build factories in America, because you got to move atoms. Like you've got to build a building, you've got to install equipment, you've got to train people. Like that doesn't happen instantly. So
it looks like Elon is not the biggest fan of tariffs. It looks like Elon's basically saying, hey, this shit's not that easy to just be able to navigate as much as people think. Oh, Bank of America. All right, Bank of America CEO. Here we go. We got him live. Let's see what he has to say. If he's bearish, bullish, we'll watch this, and then we will end out the open for today. Here we go.
I'm doing okay, trying to figure out what to read into all of this. I mean, you put up a good quarter, especially on, the trading like other banks and net interest income. How much should we read into this healthy snapshot given the enormous uncertainty we face about what comes next?
Well, I think, Sarah, as we laid out in our earnings presentation, the analysts just a short time ago, we basically laid out our first quarter 2025 results, which was 18% EPS growth, revenue growth, modest expense growth, good credit quality, delinquencies down, charge-offs down, et cetera, which in loan growth and deposit growth, showing that the economy is still growing and our consumers are still spending. But on the other hand, we said, here's how we're positioned if any of these things that we all are talking about and you're talking about every day could come true. Differences in policies across multiple dimensions, what that could do to affect business spending and capital formation. And all those things are out there. But in the current environment, we try to draw a bright line saying, hey, the first quarter of 25 was another good quarter for Bank of America.
How much has the trade war impacted the results so far? And if not, when do you expect it to do so?
Well, I think the tariffs and trade haven't impacted our results in the near term because remember, it was April 2nd. So there were modest tariffs before then. I think what you're seeing is our economists at Bank of America Securities, as well as economists around the street, are lowering their growth expectations and increasing their expectation that there could be a recession up in, from 20% to 40% or whatever the numbers are. And are increasing unemployment levels up a bit. And as you look at all that, how a bank thinks about that, that goes through our reserving methodology for our loan book. And what we told people is if you take our reserves and our imprecision reserves, our judgmental reserves, and all the conservatives we throw in, we're sort of reserved at a 6% implied unemployment rate, which is far where we are now and above where most people think it will get. So the banks have done a lot, and our bank has done a lot to position ourselves through with capital, liquidity, credit quality, multifarious portfolios for times of stress, of which we haven't really seen other than the pandemic for a long time. And we're prepared for that. And yet you're not seeing it reflected in the current numbers. You're reflected more in how we're thinking about credit and provisions going forward.
What do you hear, Brian, from the CEOs you talk to? So many, small, medium, large, about investment and hiring plans given the new tariffs.
Well, I think it's not the tariffs are one aspect of it. You have the immigration policy and the ability to get workers. You have the tariffs. You have the tax bill, which is moving through Congress. There'll be a lot of discussion as it moves towards a final resolution between the two plans and ultimately what they'll get through. And then you've got the deregulation impact across all industries. And I think each of those are hard to figure out, and all of them together, all moving at once, are even harder to figure out. So the new administration came in with ready to go compared to the first Trump administration. They put a lot of stuff on the table. They're pursuing all that. And while we talk a lot about tariffs, all these other aspects are going on too. And the average business owner is trying to figure it out. And that's causing them probably to be a little slower in making decisions on hiring or capital investment until they figure out the path forward. Now, in a company like ours, we've got, tens and hundreds of people who spend all their time thinking about that. We've got a research team, which is a great team that spends all their time thinking about that. But if I saw a lot of mid-sized companies and smaller companies last week. If I were one of them, I'm sitting there saying this is hard to figure out. So they're being a little more conservative. You're just not seeing it reflect in their current, asset quality or anything else at this point.
Well, have you seen any notable increases in companies tapping credit lines for precautionary reasons?
We have not. So if you go back before the pandemic, the average draw rate of middle market credit lines was, say, 40% to make it simple. That fell to 35%. It's run around 36%. So you're not seeing people like they did during the first stage of the pandemic 5 years ago. About this time, we saw $70 billion in commercial lending come through in a quarter, which is way outsized compared to what we see. We grew loans 4% year over year. Think of that as $40 billion over a whole year, not $70 billion in a month. And so we haven't seen anything like that. They're calm, they're making money, but they are worried about how all this works and how it could reflect, the changes in supply chain, the changes in costs. Can they pass that through to their customers? But the other thing we have to remember is the U.S. economy is dominated by services too, and those are a little bit different. And one of the worries I have about tariff policy and stuff is when does the services get dragged into it on an international scale? But in the U.S., a lot of services side consumption's been strong. And the last thing I'd say is we told people, and we've talked about it many times, Sarah, is our consumers in the first quarter of 25 moved 4% plus more money out of their accounts than they did in the first quarter of 24. And for the first part of April, using a 4-week average just to make sure we don't have bumps, and it's running about 5%. So the consumers are still spending money despite the polls that say they're going to stop. They have not stopped yet.
I was going to ask.
Well, that's nice to hear. Consumer confidence, not necessarily, at least from Bank of America's perspective, going down as aggressively as some of the soft data would tell us that it's going down, like the Michigan survey. Obviously, when the tariffs actually get implemented, we'll see how much that affects consumer confidence. But B of A saying, as of now, it's not really affecting our results in the short term.
Ask about that. And you see that on the high end, low end. I guess the question is how much wiggle room there is.
Well, if you think about their credit quality is strong, they still have money in their accounts, they're employed, and the wage growth has been strong. So that all sets up unless we have more layoffs and more job loss. So what I watch as I've learned over the years from our team is I watch the new claims for unemployment, and they're still sitting in the 200 to 230,000 range a week. And that then cycles through, and the continuing claims at 1.8, 1.9, whatever they are, a little bit elevated. And we got to watch that. But right now, you're not seeing that impact. When that happens, the consumer will slow down their spending. And we're seeing it across the board. It has shifted in terms of more experiences, services, less travel on planes, but more travel on boats. And it moves around as it always does. But in the end of the day, it's solid spending at a rate that's consistent with an economy that's grown 2%. It's consistent where it was in 17, 18, 19. It hasn't slowed yet, and I use the word yet because it may if there are more actual job eliminations and reductions and people are unemployed. The unemployment rate's still very strong.
No, I know, and it sounds like everyone expects that, but no one knows how much. You said you'd be worried about the trade war if we get into an area where services are included and not just goods. What do you mean by that? What's the worry here?
Well, we export a lot of services in our country along many dimensions, and you're hearing that more on the European side, who import a lot of our services. It's more of a balanced picture. And will they start introducing taxes on, various enterprises to start to as a retaliation, and that you worry about because that could have another impact on America's competitiveness. And so I think people are talking about that. It's not talked about as much because all the tariffs really are on goods today. And it's about bringing the manufacturing jobs back and about U.S. consumption of U.S. goods produced. But U.S. consumption of U.S. service produced is a big part of the economy, and worldwide consumptions of U.S. services produced is a big part of the world economy. And we want to make sure, we as a country should be highly interested in making sure that stays the case.
Well, despite all of this, Brian, the economic uncertainty about what lies ahead, you did, I mentioned the big beat on net interest income, but also maintaining guidance for fourth quarter on this number. And I'm just curious about why. What gives you the sort of confidence and visibility to do that with the rate outlook also changing?
Yeah, so from the last time we gave earnings to this time 3 months ago, we were at 1 cut. Now we're at 4 cuts. Now, one of those cuts is in December. That's not going to affect the fourth quarter much. So, but if you look across those cuts and think about them, we've absorbed that in better growth. Frankly, deposits perform better than we thought. In basically, as our portfolio repositions, that happens, and it may, that's going from 2% levels to 4% levels. That's going to be lucrative. It may be, if there's 25 basis points of 50, it would be a little bit more lucrative, but it's very lucrative. And so we gave the walk in our earnings presentation, but roughly $1 billion lift from this quarter, completed the first quarter in 3 quarters, is strong growth in 6 to 7% NII growth is, sort of counter the trend, is how our great company just generates more loans, more deposits, and the repricing of the balance sheet, which extracts the value of those deposits over time, produces that NII growth. So it shouldn't change a lot, but it was less than we thought it would be, but we made up for it with other growth and other things going on.
Yeah, what is that outlook for loan growth at this point? I think you put up some of the best of the group so far.
We have low single-digit loan growth, and that's part just the return on the investments we made across the last 3 or 4 years, and more loan officers in our middle market and small business area, business banking, we call it, companies up to 25 million in revenue. Those areas have been growing solidly, except for commercial real estate, which has been flat to down. All those areas.
All right, I'm going to stop that there. There's only a minute left in the interview. We pretty much got what we needed out of the interview. We have a new Trump tweet. So I guess we will close out the market open with a tweet that was literally posted at 10:46. It's 10:47. Here we go. Okay. From Donald Trump. Our farmers are great, but because of their greatness, they always put on the front line with our adversaries, such as China, whenever there is a trade negotiation, or in this case, a trade war. The same thing happened in my first term. China was brutal to our farmers. I told these patriots to just hold on, and a great trade deal was made. I rewarded our farmers with a payment of $28 billion all through the China deal. It was a great transaction for the USA until crooked Joe Biden came in and didn't enforce it. China largely reneged on the deal, although they behaved during the Trump administration, in parentheses, only buying a portion of what they agreed to buy. They had zero, capital letters, respect for the crooked Biden administration, and who can blame them for that? Question mark. Interestingly, they just reneged on the big Boeing deal, saying that they will not take possession of fully committed aircrafts. The USA will protect our farmers. Okay, so Trump is saying a couple things there. Number one, he's saying, I think he's previewing that China is about to do some stuff with their farmers in regards to, in particular, soybeans. That's one of our biggest exports. There might be some stuff going behind the scenes that he knows about when it comes to farmers being casualties in this trade war. And then he's mentioning the Boeing news that we talked about in the morning. Where's the S&P? The Boeing news of China basically not buying as many aircrafts as they were going to buy. S&P basically flat right here. But he didn't really there's not really a point to this tweet. He's kind of just like he's not making a statement or anything. He's just blaming the Biden administration for the trade deal in regards to farmers not playing out the right way. Again, I don't think anyone cares about that anymore. We got to focus on the future. And now he's saying that China is doing the same thing they did with farmers with Boeing. I guess his last sentence is him not backing down. He says in all capital letters, the USA will protect our farmers, with a bunch of exclamation points. He tweeted a straight thought. Yeah, exactly. He's kind of ranting right now. Market's really not moving to that tweet because there's nothing to move off of. I mean, he didn't really say anything. He didn't announce anything. He didn't say any conditional statements of if this, then that. It's kind of just, yeah, China sucks. That's basically the point of this tweet. You know what my takeaway from this right now? My takeaway from this is that I don't think we're anywhere close to a deal with China. I think that's what's going on right now. I don't think we're anywhere close to a deal with China. I mean, if he's tweeting stuff like that just to be upset at what China's doing with Boeing, which honestly, can you blame China for what they're doing with Boeing? They're retaliating. It's a trade war. They're not going to buy our airplanes, okay? Like, it's a trade war. They are going to do what they have to do to protect themselves. So we or them, or presumably both of us, have to come to an agreement and sit down like adults and say, hey, we want you to buy our Boeing. And China has to say, hey, we want you to buy all of the stuff that we make in China. Okay, cool. Let's come to a conclusion. Because until then, it's just going to be this tit for tat going back and forth. And it's stupid because we inevitably know what's going to happen, which is a deal, hopefully. Because if we don't get a deal with China, then I don't know how this market turns out. But farmers are complaining to their representatives and he's feeling the pressure. That's a good point. That could be something that could be happening right now. Farmers could be complaining to their representatives. Representatives could be calling up the White House and saying, hey, like, our constituents are pretty pissed off about this trade war now that you're getting in with China because China buys a crap ton of our soybeans. And that's what is a big part of the exports in the United States. And so maybe he's putting out this statement to get the farmers to blame Joe Biden instead of him. I mean, that's the only interpretation I can get from this right now. Either way, it's a mess. It means that we're not anywhere close to a deal with China. That's what this quote is signaling to me. S&P 500 right here, 540.84. Everything else pretty much green or flat on the day. Palantir, Hood, Rock Lab, all of them not as high as they were before, but still kind of green. Palantir right here up about 3%. Rock Lab up 7%. Robinhood basically flat. S&P up about 0.3%. We are still a far way from a deal, folks. This is also not a good headline because obviously the EU coming out today and saying that our talks are not productive and we had a 2-hour conversation. We got nothing out of it. That also hurts progress on trade deals. So guess we got to keep waiting. We got to keep waiting for some progress. But China and the EU both. The only good deal we had today was Canada saying that they're going to delay reciprocal tariffs on food and beverage manufacturing for 6 months. That was the one good headline we got today. Everything else, yeah, we saw the Canada tariff pause announcement. But that's not against all the tariffs. That's just against a select amount of them. But it's important and it's nice we got a 6-month delay. But EU and China headlines seeming to be the opposite direction. All right, cool. That's it. That's it for today. Of course, we get this tweet to end out the show, but that is it for the day. I have to end a little bit early, guys. I have to, my dad is trying to sell one of his, he only has one property, but he bought a property back in 2009 and I've been trying to help him completely sell it. And today we have a cleaning crew that's like completely unloading the entire property, the garage. There's like 10 years worth of just like trash that's in the basement. So I got to go down there, monitor that, make sure that's good. I'll be back for the close. Keep you guys updated on it. If anyone wants to buy a property in New Jersey, hit me up. We're selling it for $1 million. And I think it's fair value given the location that it's in. So yeah, going to be going down there, monitoring all that stuff. Honestly, I told you guys this a while ago, but property prices already started declining in the area. So I don't know if we're actually going to get $1 million, dude. Like, I think we'd be lucky if we get like 950,000, but I'm like putting some pressure on him to do, because like I think we got to do this before the market crashes, or the housing market, if the housing market could crash. Now, granted, he's owned it for 15 years, so it's like he wants to sell it as well. It's time, but we're trying to figure it out. What's your cut? I get no cut out of this, dude. I don't know how Indian families, it doesn't work like that. You just help your dad, you know. So if anyone's seriously interested, if you're like a real estate investor, hit me up on Twitter or email me. My last name, cookraja227@gmail.com. But yeah, we're trying to sell this thing. So yeah, so I'm going to be there for the next 4 or 5 hours. Make sure the cleanup goes well. And then we'll start some open houses in the next couple weeks. And hopefully, yeah, it's not going to be $1 million in cash because he owns it. It's 50% with his brother. So it's like, it's definitely not going to be like $1 million in cash. Also, we have taxes and all that stuff, but still, it would be a good return given he bought it. Like he bought this thing in like late 2008, early 2009. So, and he only has like $5,000 left on the loan. So he got it when everything was tanking. And now it's time to sell this thing. Don't destroy your nails. I will try. I'll try not to destroy my nails. But yeah, dude, this China headline, this EU headline, it's not the best. It's not the best in terms of making real progress. Now, granted, this is going to be an up and down journey, so I don't expect it to be easy for us to get a deal with China and the EU anytime soon, but this is the nature of volatility we're living with. I mean, the fact that that EU headline came out and said they're not making progress and that was enough to make everything go red is hilarious, dude. It's like this market is incredibly fragile and any itty bitty headline is enough to take it down, but also any itty bitty headline is enough to take it back up. So we go both ways. We're just hoping we come to the upsides. All right, cool. That is it for me. Thank everybody for being here. We'll be back on the market close. It is a multifamily property. One of the tenants just moved out the other day too. So yeah, it's multifamily. I think it's like 3-family property. So yeah, now he's planning to sell it. Word of the day. All right, what do we got on word of the day? Word of the day is what is it? Word of the day. Yeah, we will have Technical Tuesday today. So Jason should be there. Word of the day is schroff.
Schroff.
To test coins to find out the purity of the metal. Okay, this is a boring word. Let's get a better word of the day. To test coins to find the purity of the metal. Okay, here's a better one. Here's Merriam-Webster. Let's see what we got here. Does the house have bricks? Yes, the house definitely has. I think it's a brick house to be. So we definitely got some bricks on it. Pugnacious.
Pugnacious.
Of course, it's pug instead of pug. But someone described as pugnacious shows a readiness or desire to fight or argue. Okay, there you go. I guess you could say Trump is very pugnacious, especially because he's picking a fight every other day. And this market is pretty pugnacious against all these different headlines that we get for the day. All right, that is it. That is it. We are done for the day. I'll be back on the close. Important close today. We got IBKR and United. IBKR, very important for market sentiment, and then United, very important for consumer demand. So those are going to be the main 2 earnings on the day. Then we have Technical Tuesday. So we'll get through that. And that's it. That will be it for the day. And then we'll have the daily recap, as always. We got back to doing the daily recap. I love doing that show. Started posting that yesterday again. So we will continue to keep that going. Also, 2 days in the gym, consistent. So went on Sunday, went yesterday, going to take a break today to try to let the muscles relax. But eating's been going good. And it's going good, dude. Eating the right way. Down 5 pounds since mid-March, I should say. And we're heading back to the gym. So we're hopefully starting Q2 off in the right direction. Q1 was a mess. I know. Stock market, health, everything. Q2, we're getting back to the right direction. And then hopefully we can sell this damn house. That would be nice to see as well. Down 5 pounds and 100K. That's how we end up. Yeah, that was March, baby. Down 5 pounds and 100K. Dude, I don't know. I feel this rejuvenated sense of motivation. Like, it just like over the weekend, I don't know. I was really productive on Sunday, got a lot of stuff done, went to the gym, and then I followed through yesterday. Been eating good the past couple of, I would say, weeks. And now I just want to keep it going. I really just want to keep the momentum going. If we're going to lose money in the market, we might as well lose some weight as well and get the health in the right direction. So your wallets are lighter, correct. It's a little bit heavier because the air tag's in there now, so I always know where it is. But even if I find it, it won't have as much money there. All right. Thank you, everybody. Appreciate it. Market close. We'll be back. IBKR, United Airlines earnings, 3:45. I think Trump is speaking at 3:32, if I'm not wrong. So we might have to go a little bit early to see Trump and see whatever he has to say about tariffs, and then we'll get into the earnings as well. All right. Thank you, everybody. See you guys on the market close. Bye, everyone.